Peace, power, and profit to the family. Let me get this mic set up here. All right. Volume is solid. Peace, power, and profit to the family. Let me get this mic. All right. So, yeah, we're good over there. Good on YouTube. All right. What's going on, everybody? Peace, power, and profit to you all. Uncle Jocelyn, great weekend to you all. Of course, it's Saturday, right? The most boringest day on the planet for investors and traders. I'm pretty sure I can speak for everybody when I say that. The most boringest day ever for an investor trader is on a Saturday, right? Because that's 2 days away from getting to the bag on Monday. Sunday, at least you can get a little anticipatory, right? But Saturday is like, oh God, I got to do something. Right? I got to do something to kill time. Right? Hey, I forgot. Is there family I can call or get with or a buddy? Oh, I forgot I got a family or something, right? Like, this is the time where essentially you spend time trying to work on self course, just in fun and lightness there, studying. So if you get time to do that, and again, just preparing, preparation stage, right? Like preparation age, right? You got hemorrhoids, right? Market got hemorrhoids that day, right? But no, seriously, these are good moments of reflection, right? So as proclaimed autodidacts, in which we all are, with self-taught, right? Teaching ourselves the ability to summon money essentially through these investment markets, right? These financial vehicles. These are a great time to kind of sharpen your craft, right? Again, learning more about the system much as possible is almost universal, right? If you want to keep up. Now, the great thing about it doesn't require you to have certifications, right? Now you can get your Series 6 license and all that stuff and take it to the next level and get on that side of it as an accredited, broker and all this stuff like that. That's fine too. But ultimately, everybody has ability to come into this market, in layman value, right? Doesn't require you to have any kind of extenuated education, so to speak, right? So that's a good thing, right? But nonetheless, it's not a bad thing if you do get it too, because guess what? That's just more knowledge that you obviously have afforded to you, right? So shout out to you all, um, you know, who took the opportunity to learn something, right? Right? To learn something, right? Because that's positive, right? That's a net positive. When you're acquiring more from the system, to use the system to your advantage, right? Because if not, they're going to use you, right? So you may as well get used to learning how to, use those apparatuses, as you want to call it that, to your advantage, right? So this case is the financial markets, right? So get excited for the financial markets, right? So gotta love that, right? So shout out to everybody tuning in. Again, I know it's college football season. People, knee deep in their little college or their little school of choice that they like to root for. Of course, I used to say my team and all that stuff back in the day. So I woke up and say, you know what? These teams are not my teams, right? Unless they're gonna cut me a check, then I can't keep claiming them like that, right? That's a very one-sided relationship, right? If only thing I can get is an emotional high, then I have problems with that. Right? Because emotional highs never put food in your stomach, clothes over your back, and a roof over your head, right? Emotional highs do not get you to point A to point B. It may help you with your self-esteem, but that's far as it goes, right? All right. So we're trying to again push the narrative in a way where we want to be doers, right? We want to be, people who have positions of power, right? Knowledge brings power, power equals profit, as we like to say a lot, right? So again, the prerequisite to all of those is knowledge. You can't skip the knowledge and go straight to the power and the profit, right? It just does not work that way. Some people have you think that that's how it's set up. Well, I beg to disagree, right? And I will disagree emphatically that you got it all wrong, right? You're not understanding the depth of the blueprint. The blueprint is set up for those who are actively engaging in knowledge, to then take that knowledge and monetize it. All right, I repeat, monetize it. Right. From that point, you'll never work a day in your life. Essentially, right? You never work a day in your life because you're using what you have to work for you. Right. In this case, the money, right? Money is a tool, money is a resource, right? It is pretty much the currency of choice that is utilized for the most part to get things done. All right. So in doing so, of course, when we utilize it in the the financial markets, there's different things that make up that ecosystem, so to speak, right? Right. There's buyers, there's sellers, right? There's banks, institutions, hedge funds, right? There's a lot of different hands in the cookie jar, so to speak, right? There's the Federal Reserve, right? Because we know right now we are inside of a Keynesian marketplace, right? And the Fed's got the market by in a chokehold, right? As we see, they are the ultimate dealer, you know, at the casino, right? Because they control a lot of the money, the liquidity of the flow is coming into it. But in doing so, there's also other aspects of it as well, right? There is, what we consider to be a lot of quote unquote hidden hands behind the scene, right? There are a lot of hidden hands behind the scene that moves markets in ways where a lot of retail traders have no clue, or they're just not privy to understanding what the agenda of what these people serve, right? While they're in the markets, right? So, of course, that's a part of discussion that we'll touch on a little bit today because a lot of people know, but it's good to know why, right? Because a lot of people will be under the impression that sometimes when you have that kind of strong bias and conviction that markets are supposed to just really work for you, uh, you know, you know, they're trying to do everything to make sure that it works for them more so than work for you, right? And when that happens, of course, that could put you in a bad state. Uh, you know, I don't know, maybe emotionally, whatever, because you can't really, get that up, get that out of the market that that's necessary for you to be able to benefit from the way that you planned it out to be, I should say, right? Because the market, uh, in essence, it's trying to just stay neutral as possible. Well, yeah, you would think so, but of late it just seemed to be one sided, right? Just going up, going up, going up, right? Well, they by design, markets are designed to go up. Period. They're not designed to crash just because you have a feeling that it should crash, right? It doesn't work that way. Why? Because there's still a lot of money still what allocated to it. There's still people holding their position. If everybody holding their position, how can the market just crash? Right? Again, like we said earlier, in order for the market to have a value, right? Of course, there's two players, buyers and sellers, right? If no one is selling, then guess what? you know, the market has no need to crash, right? There's just more buyers than sellers, then that keeps the market obviously up, right? So again, this stuff is not rocket science to that regard, but sometimes you have to put some context to that because a lot of times people get it misconstrued, and sometimes we can get ahead of ourselves, right? So we're trying to make sure that we're always on the neutrality side of understanding directional bias, right? I know I said a mouthful there, but there is a thing of neutrality when it comes to directional bias. You could be directional bias towards a stock, whatever, and still understand that neutrality is still what a positive value, right? As odd as that sounds, that's just the reality of things, right? It's actually called delta neutral, right? And some people use the value of delta hedging to be able to take care of that, right? To take care of that aspect when they think markets are just pretty much in a stalemate, right? We know what a stalemate is. Of course, definitely, if you play chess, stalemate definitely basically is a zero sum game, right? There's no winners, no losers, right? We're just in between, right? And that's a good thing in some cases when it comes to markets. Why? Because of course, if you are directional bias per se in an options trade and you got time, well, there's a buildup happening at a certain a pivot point, right? Or a demarcation line or a gun line. We like to say, tell about the gun line, boss, right? Uh, and it's building, momentum, right? Consolidation, accumulation, those things that we know about that we learned early on in our investment trading career, right? When markets are somewhat just in a, again, zero sum game, just going sideways. But eventually, when that market breaks either upside or downside, that's when the fireworks kick off, right? Right. That's when the fireworks kick off, right? And so, if you are a person or a comptroller or controller of the markets in a way where you're trying to protect the essence of markets, which is what to the long side, because the ultimate goal for markets to go up, right? Hate, like, love it, indifferent to it. That's the mandate of the markets to go up, right? Who would not? who would invest in something that, has a model of, declining, right? Declination, right? No, I didn't get in it for this, right? I need growth. I need the company to, to utilize the stake that I have put into them, in essence, to grow their company, which in turn helps the broader market, right? If everybody do their part, quote unquote, right? That's how this stuff is set up, right? But yeah, you can also trade both sides. So get excited for that, right? You can definitely go after the market, from both perspectives, up or down, right? And it's called delta hedging. Now, now not necessarily in essence just delta hedging, but delta hedging is the aspect of that. If you got long-term positions out there, right, and the broader market is pulling back for some odd reason, and you're just trying to protect your long positions a little bit, you can delta hedge it, right? Because if felt the strength to the upside, then you can protect yourself to the downside. And if the market just comes back, I don't know, let's say it runs up, 10 points, 10 basis points, it pulls back, you know, 2 basis points, then maybe trickle down to maybe 4 basis points, shoots back up to maybe, minus 2 basis points off the top, pulls back down to maybe minus 5 basis points from that point. Well, where do you end up at that point? Right? You end up basically being down around about 6 basis points, 6 to 7 basis points. It may seem like a lot when you look at the chart, but ultimately the stock ain't really plummet like it could have been if it just dropped right out the gate, right? Which puts a fear, of anybody, any higher power in them really quick, right? When their money just looked like it's like, whoa, what happened to my money? It just evaporated, right? Hey, you have some condensation going on inside your brokerage account, right? And so, that's how markets are regulated, right? There's a hidden hand that's trying to keep the markets neutral as possible. Like people, well, how can you make money in that situation? Well, yeah, you do make money in that situation. Why? Because markets remain steady, on course to trickle up to the upside, a little bit by little bit, small increments, right? Your 401k, your TSP, your Roth is protected, right? It lives to fight another day, right? Keeping the market neutral as possible, even though there's a barrage of people trying to bring it down, right? Short sellers, they're out there, right? Yeah, I'm one of them, right? I got long-term positions too, but I love shorting. Right? Why? Because again, things come down a lot faster than they go up. That's just physics, right? Don't come from me, right? Don't come from a Nick, right? Physics has its place in the markets. And so in the same breath, you may think that things only, stocks only go up, right? Stonks only go up. Then you highly confused thinking that they won't come down, right? So that's important. So that's why, having, the mindset or the conversation brought up in a way where you have to understand that sometimes markets would throw curveballs at any given moment, even though there's an expected value of movement that may be coming. It will somewhat, try to play the role of just trying to, play the referee, right? Try to balance everything out, right? You got everybody angry on the call side, everybody angry on the put side, right? The bull is angry, the bears are angry, right? And in between all that is somewhat the peacemaker, right? So that peacemaker is known as the market maker, right? The guy that the people that handle all the order flow throughout the day and keeping markets flushed with liquidity when necessary, and keep markets from spiraling out of control. Uh, it would seem that it's one-sided when it comes to what the bears, right? Because like, man, the market just don't want to pull back, man. The market is crazy, man. It's overbought, is this, is that, is fake, is fraud, is scamming, all this. Why don't they just let it come down 10%? Right. Well, it's for the same reason we spoke about earlier. Until you get a barrage of more people starting to want to sell their share equity stake in a lot of these companies, ETFs, mutual funds, et cetera, then you will not get that deluge pullback that most people are more, I guess they're more excited about potentially having at a point when markets are just clearly on paper, they are overbought, in a lot of ways. Of course, we know that. But as the old saying goes, markets can remain irrational longer than you can remain solvent. That means you run out of money a lot faster than before the market, decides to head south, right? Right? Because your money, it can only go so far, right? When there's bigger money propping the market up, right? So in that same breath, you also have to learn how to delta hedge, right? If you're more aggressive to the downside and puts, then it's okay to have some calls, baked into your your positioning too. Yeah, because markets do also pivot off, pivot off support points when it does pull back substantially, on a bad, news reel or a bad geopolitical headline, whatever. That's fine. Get excited for that, right? Get excited for that. Because ultimately, if there's a downtrend intact in terms of, you look at the broader market and say, well, it's in a downtrend now. Well, guess what? There are bull runs and bull, squeezes that happen in bear markets. Clearly, right? Even on red days, people made money going to the upside. Let that marinate for a moment. Right? Somebody was bullish on a bearish day and still made money. Right? Pivots happen. Right? Flushes of liquidity hit certain stocks at certain time, causing them to what? Bump up a little bit. Right? That happens. Right? So you got to love that, right? So yeah, matter of fact, looking at the YouTube video, our sister Angie, right? Yeah, but Angie just posted the definition of delta neutral, right? A delta neutral portfolio evens out the response to market movements for a certain range to bring the net change of the position to zero. Zero sum game. No winners, no losers. But in this market, yeah, if you trade an option, there are some losers, right? It could be lose on both sides. That's what's crazy about it, right? And in the end, who wins when there's losers on both sides? Well, the good old-fashioned dealer. In this case, it's the market maker, right? Because they're collecting premium by trying to what? Buy positions, buy calls, buy puts. They're trying to play the middle as much as possible, right? And in doing so, they receive a payout if your position goes to zero or less than on either side. They collect their premium. They sell in position, they selling puts, selling calls. Right? Sometimes they buying premium outright. Right? They're trying to keep the market stable. Right? It's like the pilot, inside the Delta 40, not the Delta, excuse me, the Boeing, right? yeah, for lack of better terminology, right? The Max, right? That Boeing Max plane. So with the 730, what was the 737? So I forgot which one it was. Man, right? For lack of better, terminology, they're trying to keep that thing steady from falling, out the sky, right? So essentially, again, that's the job of the market maker. So understanding the power of delta hedging is a good thing, right? Or having a delta neutral portfolio, right? Essentially, if you have a heightened sense of dividends in your portfolio, a company that pays pretty good dividends, right? Who are basically near legacy status, right? Right. Guess what? That's good for your portfolio. If your stocks are not just dropping, and yet you still keep adding to your position, your principal value, that means you have more share structure to pull back from that dividend. When they cut that dividend, that's extra money. And you didn't lose stock value to be able to gain that extra. See how that works? So if my portfolio is more leaning towards a dividend investment program, take care of my life, later in years, where I can just get that free check every month from this basket of dividend paying stock. I want a neutral marketplace, right? I want a delta neutral portfolio, delta neutral marketplace that just keeps the stock, incrementally gaining, slow, little bit by little bit, pull back every now and then, but stay neutral much as possible and just go sideways to up. That's positive. That's positive for what? For the dividend investor, right? Right. So that's the part of the game where it has its place. Make sense? Right. So again, you got to get excited for that, right? Get excited. But it also teaches you how to strategize better. So now you know that you can also plan for the inevitable to be the inevitable in a sense, right? Your conviction may be strong for the particular direction of bias that day, and the market does what? The opposite. Or essentially it gives you the symbolic value that it may work or try to pull back, but then as soon as it start to pull back, guess what? It shoot back up real quick. You get one candle, before it gets to pull back, and it just turns around and shoots back up. Like it retraces the entire 70-cent move when it just took the market literally an entire hour and a half to drop 70 cents, and literally on 1 5-minute candle, it shoots back up 70 cents. Demoralizing. right? Inhale, exhale moment, right? You're like, what just happened? Oh, that sucks, right? Especially if you again trading options because guess what? Time matters, right? Time over money, right? T-shirt moment, right? You got to love that, right? You got to love that, right? Because again, now you just have to be more comfortable and conscious in learning how to what manage that risk just a little bit, with some care with it, right? And that happens because there's no 100% winner in the marketplace, right? There is no 100% winner in marketplace. Even algorithms don't have a 100% win ratio. It would seem because you would think, oh yeah, the market makers be turning the market. The algos get behind, headlines and catchphrase words and buzz media topics, and it just spazzes the market. Well, algorithms take L's too. Yeah, they do. Surely they do. Trust me when I say that they take L's too. So yeah, everybody's trying to outwit each other, right? To get to some alpha, seeking alpha, right? Get some profit, right? So it's okay, right? Right? It's okay. Just make sure you keep your exposure to that of what you're willing to what to account for, right? As they say, you never invest more than you have willing to lose, right? Just make sure you do it with the level of content that you know all the different variables that are out there before you jump out that window. Even though your conviction may be strong, you still have to play for the unknown, right? The variables, right? 'Cause I can assure you, as weird, I swung puts until actually Friday, just as a case study. I made money on those puts. It was a knockout, drag out. I had to really intently pay attention, but I made money on those puts. And I was convinced. I said, you know what? If I get a chance to get me any kind of day trades in by the nature of the markets, obviously showing me some good directional buys, then I'll jump in and make me a couple extra bucks. But it gave me no really clear signals to do so. Not the broader market terms. If I just want to look at the SPY, the SPY, then there were certain individual stocks that were acting up and showing out, right? It's like you think about the stock Affirm, right? Affirm, right? The Firm Holdings Company, right? This one is catching all this tension. This old, buy now, pay later. New value of fintech. Now these mega, conglomerate companies like Amazon and now Target want in on that, right? It's kind of avoiding the credit cards, right? This is how you kind of somewhat avoid the credit cards, right? They check your credit score. As long as you got a bank account, guess what? They'll roll with you, right? You buy now, pay later, right? So it avoids the traditional having to spend credit alone to be able to kind of just have those kind of paced out, payments. That's just a part of what evolution. Fintech is in here to stay. Amazon adopted it. Big name like Amazon. Of course, you love that. Why? Because who doesn't shop at Amazon? Like everybody. Now Target is on board, right? The company Target, right? They're on board with that. Right? So guess what? The market was acting, stalemate this yesterday, but Affirm inched out gains all throughout the day. Put up some good numbers too, right? Put up some really good numbers, right? So, you know, that's a part of this stuff that also helps you in your evolution as a trader, right? Or as an investor, is figuring out, you know, those sweet spots, right? How to play it in a way where you yourself somewhat stay delta neutral in some cases. But also you can have a direction of bias. So whenever that thing unloads and unleashes you that moment to get that expansion, guess what? You capitalize and you move on. If it takes you through the gauntlet, pretty much through a major part of the day, especially if you got an expiring contract, and guess what? Well, yeah, in that moment, you might need to make an executive decision because if not, it'll bleed you out from time decay or theta decays, affectionately known in the Greeks in option trading, right? So it's all about understanding how those things work as well. It just helps build a better investor over time, right? And you got to accept that in a good way. That's a positive. That's a net positive, right? Right. So one second, guys. One second here. Make sure all my sounds are good here again. One second. Okay, I'm good. Okay, sorry about that. Okay, I'm good. All right, sorry about that. All right, so yeah. So again, that's just a part of, like I say, the part of this business, right? Again, plan it from a place where you can understand, you know, again, the rules of engagement. We use that, that terminology a lot for a reason, right? Or that phrase value for a reason, because again, it helps you to be able to again manage your risk better, right? And of course, we want to win all the time. Who doesn't, right? We want to win all the time, right? And that could be somewhat, that could be bad, right? Right? That could be bad because it'll breed a false sense of what security, right? So when the markets don't go your way, then there has to be a blaming mechanism, right? There has to be a blaming mechanism there, right? To pass blame, right? Pass that responsibility, as they say, pass the book, essentially, right? You pass that book out of your P&L to somebody else, that ain't a good feeling, right? Clearly. But again, along the way, you learn a lot in that moment. We call it paying tuition, right? It's definitely what it is, right? It's about paying tuition. You pay a little bit, right? And give a little bit back after you've made some. Again, that's a part of the game. There's no 100% P&L win rate ratio in this marketplace. I look, if there's a guy that getting 100%, and there's some people who have 100% or 100% run on a little moment. Keep in mind the very nature that you can get into the market tomorrow as a first-time investor, never traded a stock ever in your life. Someone can throw you a ticker, give you a ticker to get into. You get in, you make money that day, right? They tell you when to buy, they tell you when to sell. By the very nature of that moment, you are 100% win ratio trader. That means you never trade another day in your life. You get to say, I'm 100% trader, right? Win ratio trader in the market. Now that's short-lived up against reality because doggone well when that person goes back into the marketplace at some point, right? If they unprepared to be able to handle all the volatility of markets and the flip sides and how markets change up on the dime, guess what? They'll give some of those gains back, and by that nature, guess what? They're not 100% trading anymore, right? So yeah, it's again, you got to love this stuff for the very nature that if you could just stay above 50%, that makes you a profitable trader. Let that marinate. You only have to bet, look, at 500% or 500, right? If you want to say 50, 55, whatever. If you just bet, if you can connect at least half the time, then that makes you a force to be reckoned with, right? So, in doing so, again, you're going to learn how to be very, uh, you know, cautious and meticulous about how you submit your equity to opportunity, right? That's a t-shirt moment. Equity to opportunity, right? Because every day, if you're serious about growth and evolution, right, to allow your money or your resources to work for you, then guess what? Equity has to meet opportunity. Equity cannot be collecting dust, collecting, just sitting somewhere not working, right? That ain't good, right? Them funds need to be working for you while you're sleeping, while you're resting, while you're enjoying life. Right. So again, equity has to meet opportunity. So when that happens, of course, you need to do it with the best care and concern. That's notably better for you to what come out on the better end, meaning profitable. Make sense, right? So it's all relative, right? And it's great because again, if the market maker job is to do his or her best to keep the markets neutral, then you have to see that as okay, at some point I can exploit this. I can exploit this. Why? Because guess what? At some point it's going to break, right? It's the rubber band effect. It's the pressure cooker effect, right? All that momentum is starting to build, 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 build. Eventually, it has to what? Let go like a rubber band, right? The elasticity of the markets are great from the aspect when you get that move you want, directional bias, expansion, that divergence, it's game on, right? When it's kind of holding on for dear life and it's just all over the place. Of course, in this case, when we speak about the bigger players out there like the S&P 500, whatever, Yeah, that can get a little tricky, right? That's when it gets tricky, right? Essentially, that's when it gets tricky, right? But that's okay, right? But that's okay too, right? Because again, we're taking, uh, you know, we're taking these quote unquote these risks under the auspice that, hey, at least we know all the outlier, scenarios that could happen in this moment. And if you feel convicted when those things come together, guess what? You make that move, right? You make that move. And again, if it doesn't go your way outright, then guess what? There's a thing called cutting your losses. It's okay to cut your losses. Even if you don't lose, you just kind of stay neutral, right? And don't make nothing. Okay, I burnt the day trade if you took it that day, if you swung it, then guess what? You walk away, unscathed. That's not a bad thing. As the saying goes, sometimes the best trade is one not taken, right? Or being able to walk away at least neutral, right? Or even with a small loss, right? You're going to gain so much more in knowledge from that than, let's say, if you just say, okay, I'm just going to force the market to bend to my will. If this position don't work out, I'm willing to go to zero with it. About that. No, we're not willing to go to zero. I'm sorry. All right. We're not willing to go to zero. Right. Right. Again, if I could spend 100 and walk away with a 20, that's a win. Some people are like, that don't make no sense. And that you just being cheap. Now, how's that being cheap? Every dollar helps. Every dollar counts. Are you kidding me? There's stocks that are under $20 a share. There are option contracts that cost under $20 a contract. Are you kidding me? I could take that money and get that back on something else. I've essentially turned $5 contracts into $250 in profit. True story. Tell me you can't do it. Right? I can show you. I've done it. 5 into 250, then done it. Right? Thursday, turned 44 into 370. $44 to 370 in less than 12 hours. Right? S&P contract call by $44, 439 strike. The market spazzed out, right? Spazzed out, ran right on up there, from Wednesday into Thursday. And guess what? I take that. Swung it from Wednesday into Thursday. Market gapped up and ran. Hit my strike price, went over, exceeded it. $44 turned into 370. Get excited. So yeah, I say every dollar counts. And yeah, you too can do a little something strange with what? With a little piece of change. Right? Right? I repeat, you too can do a little something strange for a little piece of change. If you just, again, focus on learning how to what? Be very calculative and thorough in your decision making from that perspective. Doesn't necessarily mean you're going to be always right, but that's the nature of this business. And this is me today speaking strictly to the trader out there, not more so the investor, but the trader out there, because the trader is caught up in the day-to-day intraday action, right? The trader's caught up in the everyday, intraday action. They're trying to capture that money in real time, right? So yeah, they got to deal with all the volatility. They're not concerned, with tomorrow or the day after if necessary. But the investor is concerned with what tomorrow and the day after all that. Because they're like, okay, this is just a part of the market. Markets go up, markets come down, sine waves, right? Get excited. Right? Noon. What is a noon, right? Right? Right. See, that's why you have to be versed, right? You have to be versed in the art of the money netter. Right? We coined that, right? That's ours, right? We own that, patent that, trademark that, copyright that. We are the purveyors of the money netter. We know how to read the money netter, right? We know how to read the glyphs of buyers and sellers and moving averages and oscillators and indicators and Ichimoku clouds and Fibonacci retracement bands. And we are versed in the art of money netter, right? And being able to decipher that puts us at a what, at an advantage in this, right? So you got to get excited for this, guys. Again, you guys are doing something that's uh you know different than that of the average person who's out there dependent on the system, right? you're doing something of alien classification. Right? There are people who are astrophysicists that would dare not touch an intraday portfolio. They wouldn't even know what to do with it. They would say, okay, I need some time to look into this. Right? Because they're too busy trying to be what? Mathematical, right, and exact, that the markets are not that. Markets are not an exact science. Markets are not an exact science. So some of the best multitaskers on literally out there come out of the what? Equity markets. And let me repeat that. Some of the best equity traders out there come out of what? In terms of the multitaskers come out of what? Equity markets. To deal with all that, process all this information, these moving parts on a day-to-day, it's man, your brain is being retooled to be something phenomenal. Right? Your brain is being retooled. Man, look, gotta love this stuff. So again, the topic of that, again, like I said, just want to come on and build on that a little bit. The delta hedging aspect, right? So delta hedging, the verbatim definition of that value is basically when you're when delta hedging is an options trading, right? It's basically an options trading strategy that aims to reduce or hedge the directional risk associated with what price movements in the underlying assets. The approach uses options to offset the risk to either single or other, option holding or an entire portfolio of holdings. So if you long one side, you buy what? A put for the other side, right? If you long equity, common shares one side, you might be shorting two at a certain point as well, right? Now that's basically at the same starting point though. As you go short, go long at the same time, kind of like reality. But if you're smart, you can delta hedge for profit value too, right? Because you're just playing pivot points, right? We talk about that a lot, peak to trough. If you catch those pivots just right, guess what? You can ride it up from the day when it's kind of riding out to the upside. As soon as it turns in reverse, you close that loan and you turn around. Since you go right up that, you go what? You go short. And if it goes back down to all the way back down to that starting point where you got in at, guess what? That was a delta hedging position, right? And you made money on both sides. See, that's the part of the game where they really don't go into deep detail about that part of it. They just say if you just buy, a strangle, right? You strangle the market, then you keep it sideways, then you make money that way, right? Or outside of that, that's okay. Some people say that's a useless strategy, or it's not. It's keeping capital, still fluctuating where you can ink out some incremental gains in that point one way or the other. Then that's a net positive. May not be the same if you get a total expansion on a contract that's booming your direction. Then that's the dream, right? Right. So again, hey, it's okay. It's okay to gain a lot out of being patient with the markets and allow the markets to move, because the dealers out there, we know them to be the dealers, right? Right. They're tricky, right? They're a tricky brew. They are a tricky bunch. Those market makers, I tell you, right? We know them affectionately known as Edge, Askew, NYC, SIBO, and right. There's many different type of market makers that's on the books, right? And their ability to buy and sell shares to keep the markets liquid, and then also to keep the markets balanced as much as possible. And for them to not take L's as well, because they're in the business of making money too, right? Market makers take L's when stocks jump up and go short, squeeze out of nowhere. Right. On top of short sellers getting squeezed and everybody else taking L because they didn't plan for that, right? They didn't have enough, protection on the marketplace at that moment, right? So again, that's what makes this stuff awesome, because you're learning again uh, how to be more positioned and how to be protected, even when moments when you just can't, have those knockout, drag out day, those stellar days, right? When you okay, the day gonna be that day. I'm gonna make me a nice little bag, right? Because again, as we always like to say, we don't want to breathe a false sense of security ever, right? Because there's no such thing as 100% layered security, right? The only way you have security from this planet if you ain't born. Let that marinate, right? If your parents never, conceived, then you got protection. You just in spirit form, I guess. You protected, right? That's it. Yeah. because we know death and taxes are certain, right? Yeah. So again, we're just trying to make sure we stay on the right side of this stuff. So they're playing the neutral game. They're trying to keep markets stable. And it will dig into your option position sometime through theta decay, right? Delta replenishment, right? Right. And the Vega and everything start to kind of get out of whack a little bit. Dig into your intrinsic value. Because extreme IVs just another opportunity for market makers. When they see that, how can they add neutrality to all that implied volatility? Well, then, yeah, of course, they're going to try to play the game of what? Hedging against all that particular momentum. And essentially, if they're able to, they will kill the options, right? Or kill the particular directional bias, either on both sides, or definitely one side, but definitely both sides. That's when it becomes a delta neutral moment. They kept the market in check that day. No true real expansion. So that's why a lot of people say, well, what's the use case of buying out of the money if you don't really have that kind of level of intentional directional movement in markets that will give you that opportunity to hit that strike price? That's why most people buy mostly in the money or at the money, because at least from there, if the market is going sideways, going nowhere fast, well, guess what? If it inks out a good little 40, 50%, no, excuse, not 50%, or 50%, 70% move in your direction, and you expect at least $2, $3, 2, 3 basis points to move throughout the entire day. In that moment, if you still got time on that contract, the premium of that will still give you some kind of value of a win, right? You still get some value of a win there, right? So yeah, that's a part of this too, where you got to be excited for, again, hey, you're trying to fight against a lot of people who are holding, right? One way or the other, either short or long. And if the trend is more, I don't know, relegated towards a long position at a certain point, then yeah, you're fighting the uphill battle, essentially, right? Well, in this case, it'll be a downhill battle, right? Because if you're trying to go short and they holding, then guess what? You're trying to force your way out of that what eggshell, and yeah, it ain't working out so tough, right? Because everybody else ain't willing, they ain't ready yet. They're not willing to sell. They're not willing to relinquish their position of that tug of war. That's what markets are. Markets are one big tug of war. Again, in order for someone to make money, someone has to lose money. And people are like, well, that's kind of harsh. No, not really. Because in order for your company, if you had a job, in order for your business to stay profitable, yeah, they're trying to win more than lose, right? The CEO has a mandate to make money, right? But you may have a competitor literally across the street, and they're doing it. They thinking the same way. How can I take more market share away from my competitor across the street? Up come a marketing sign. We got things, 20% off today. You might not have been planning that in your marketing strategy, right? You were waiting for that the next month. You got to turn around and do it right away. Implement that rule right away. You might not even be prepared for it, but you're just trying to keep up with your competitor because now they're going to take money off your what? Off your block. That's the markets. It's all synonymous. Corporate world, private sector, public traded companies. It's all the same. It's capitalism, guys. That's the global financial markets. There's no security out there. There's none. So it's about managing risk, right? It's about learning how to manage risk. But it better be in the hands that you control all the levers than somebody else controlling the levers over your life. I would definitely knock on wood to that. Let that marinate. Well, at least over here, you have that ability to do that. As an investor or a trader, you have the ability to control that value. You get to write your checks. You get to write your checks, cash your own checks. See, that's revolution. That's revolution. You cutting your own check, that's revolution, right? So, we don't shy away from these moments, right? We learn from them, right? We learn from them. right? So a part of this is you being comfortable, you know, with the markets in any aspect of how they present themselves. As hard as that may be, as hard as that may be to fathom, you have to be comfortable with that, right? You have to be comfortable with that, right? And it doesn't make you a bad trader if somehow, sometimes the market get away from you, and you know, you take a little, a little tuition, and disperse it out back to the system. Doesn't negate your trading skills, right? Because again, it's just part of the game. That 100% win rate ratio is not in existence on average, right? So yeah, so I just wanted to discuss that a little bit, because one of our family members asked a question about being delta neutral, delta hedging, the importance of it when it matters most. Of course, when markets are just doing nothing, of course, like I said, in this case, going sideways or whatever, yeah, it could be a little it could be a little head scratching if you are a short-term dated player in the place. In terms of options trade, of course, that's because you're up against a clock, and you're up against decay, intrinsic value slippage, right? you know so yeah, you will see over time that this stuff is it's a lot of moving parts, and again, it's good because you're getting so much firsthand information, so much firsthand knowledge, that you say to yourself, you know what, at some point when I really get this stuff down pat, boy, the market's going to be in so much trouble. The market's going to be in so much trouble. Again, just being able to make $100 a day, $50 a day, $75 a day, $200 a day, 250, 300, 400, $500 a day, you know, yeah, that'll be coming for a lot of you all. It's coming for some of you guys right now. But just think about that, right? Those are somewhat, like, man, that'd be a great feat. Then there's people out there making $1,000, $10,000 a day, a day, right? That's a day with a D, not a month, not a week, not a month, not annually, but a day. 365 days out the year. If I make $10,000 a day, it's 252 days out the year that I can trade the markets. How much is that? Right? Let that marinate. Right? Let that marinate. That's 2.5 million. Right? $2.5 million if you can make 10 racks a day out of 252 days out the year. Right? So yeah, it's capable, right? Right? It's capable. Right. We've been able to show that several times in some cases, right? Of course, you got to have a lot size, the amount of shares to put up in a lot of cases. But that ain't, hey, your job only paying you an eighth of what you're worth. So yeah, make that make sense. You chasing that pipe dream. I'll get a raise eventually. Okay. Right. Okay. While waiting on that raise, how about you go give yourself your own raise? Let that marinate. While waiting on Mr. Charlie to cut you a check or give you that, that increase that you deserve it because you've been with the company so long. How about you go out there and get your own pay raise? Figure out how to put your money to work for you properly while you riding somebody else's clock. Sounds like a win to me, right? And it will happen. Right? But until then, of course, you're gonna have to deal with everybody who's not necessarily comfortable with that business model. Why? Because they're trying to figure out, well, if I go work, I go to school, I get an education, I get a job. Well, at least I'm safe from the essence that I can build up, you know, a savings over time if I just, keep working hard and eventually buy me a house, a car, right? I can marry my dream, spouse. Now I got a, equal or greater partner that can help me, meet a lot of our now joint goals together. But even in that case, if there's still no extra or ancillary aspects of income coming in, other streams of income coming in, then guess what? You are subjected to inflation. You are subjected to cost of living going up every year. You're subjected to potential new people coming in vying for your position. There's still variables out there, right? Again, where's the safe place at, right? Well, the safe place is figuring out how to have multiple streams of income coming in to the point where you're being also what? Delta neutral in your growth and evolution. See, delta neutral ain't necessarily a bad thing. That means that you're protected on both sides. And there's incremental growth along that aspect of that. That's a win ratio, a solid continued win ratio. It may not be just, straight up, straight down, whatever. But guess what? That's still what adding interest onto that of what you already got from a principal perspective. Compound interest, the one mathematical equation that even whooped Albert Einstein, right? What did he call it? He called it the eighth wonder of the world, compound interest. Let that marinate. So that's what we're here for. We're here to get that compounded interest effect going. And along the way, we get some knowledge on how to be a little bit more complex in our strategies, right? Increasing one's discipline perspective, so you can also, be okay with sometimes maybe cutting the loss if the market ain't really providing. It's okay. But above all, if you front running properly, right, if you front running properly, then at least that puts you more in the driver's seat. Right? It's coming. It's happening. The very nature that you hear says that you're initiated. And this is a fine wine business model. You get better over time. Yes, you get better over time here. The knowledge increases by the nature of tuition payments, gaining growth by making good decisions, period, and making some profit, right? All that stuff matters. So I know you guys are equipped for this. I know you're ready, right? The future is vast. Look, it's a marathon, not a sprint. 5 years from now, I keep saying these things for a reason. Where are you going to be 5 years from now? The winning, right? It's just winning. Yeah, you guys are going to be winning. 10 years from now, oh, look, stop. Now you're just showing out, brother African. Of course, I'm going to be getting it, right? Right? That's the saying goes, where did they get a load of me, right? Yeah, of course. Being patient enough to kind of allow that to happen for you, man, that's priceless. That's priceless. They can't pay you enough to keep up with what your worth would be if you learn how to also utilize the ability of the financial markets to also add another layer of financial protection to your lifestyle. Meaning your money is now working for you as well as opposed to you going to clock in every day. That's a form of delta neutral positioning. I can't put all my eggs in one basket at this job. I got to have other means to make money. That's delta neutral. Let that marinate for a moment as I back away from the microphone. So we know why we're here, right? It's to acquire every ounce of knowledge that we can obviously ingest, right? To get all the game, soak up all the game, right? Because you're going to get better. You're going to get better, believe it or not, right? You may be doubting yourself sometimes, like, man, this stuff is kicking my behind sometimes. Then other time you're like, oh, I got him. Got him. But it's when those moments are not happening, up or down, is when you really win, right? Because you're in a neutral position and what? You just gaining more knowledge. You're gaining more experience. right? You're gaining more experience. You're going over charts. You're digging into, definitions and jargon and all the stuff that makes this market what it is. Yeah, you know, yeah, you becoming a major player. And did I say, oh, nobody can take this away from you? Oh, yeah, no one can take this from you. No one can take this skill set away from you. Right? Again, that's what makes it so great. Right. So yeah, unfortunately, let something like a pandemic happen again. Right? Let something like a pandemic happen again. When we sat there and watched the most wealthiest people on this planet accrue over $1.3 trillion in profit off a pandemic, while Main Street was stuck holding the bag, trying to figure out how they're gonna feed themselves, clothe themselves, shelter themselves, keep their bills paid, keep their kids sane, while they were stuck at the house, running around, mashing up the house. Look, yeah, we got this, guys. We got this. You're becoming financial warriors, right? You're going to be knighted at some point, right? You're going to be knighted. So again, we stay within the confinements of what we're able to be able to what? Function, right? With function under. Right? Never go overboard. Stay within the game plan of what? Your game plan. Stay neutral. Have a goal, set it, stay at or around it. Build that consistency. Get on base much as possible. Instantly, if a position starting to kind of show itself to be not working in favor of you want, it's okay to cut a little bit, pull back, assessment, right? Assessment moment, right? Because again, eventually, you'll you'll be able to, you know, exploit that at some point. You're building again out strategies that help you make those kind of decisions on a day-to-day basis that will give you that little extra value where another trader may be having like, okay, they struggling a little bit there. You're like, okay, I've been down this road before. I got this. I got this. Right? You be like, I got this. Right? Because I've seen this before, right? Been there, done there, did that. Right? Right. So that's why I'm excited about this stuff, right? And these moments are great because we call them teachable moments, right? T-shirt moments, right? Or just general knowledge. Of course, in this case, this is general knowledge. But for a lot of us, sometimes we go through, the rigmarole of the markets, and yeah, we need that little extra, all right, okay. I was just, all right. Let me make sure I stay, in control here, right? Let me stay in control. Right, the markets may be acting a little nutty today, but let me stay in control here. Right. So real quick here, let me run over while I am here talking about this today. Let's see here. Run over to the charts for a quick second here. Right. Our old family friend CPSL, right? Penny stocks are penny stocks, right? The penny stock of penny stock, right? This is the best outperforming penny stock, literally, of all of what in the fall of last year into this year, right? Exponential growth, right? Based from 0001, right, all the way up to what, 7 cents, right? 7 pennies, 7 pennies from 0001, right? Guess what, guys? That happened every bit since what, November of last year. What? Yeah, November of last year. It was at 0001, 0001. And it went up and hit 7 cents a share. 7 cents a share. Just shy of September, August 23rd, 2021. So less than 1 year, that stock was up over 7,000%. 7,000%. Let that marinate for a moment. 7,000%. So in moments where you say, okay, well, yeah, it made a run and went from this place here where it was just going what? Delta neutral. It was just stuck going sideways. Now, in this case, if you in before the move broke out and got into that layer and it was down here in this layer and it went delta neutral at this point here and you just got in, is that a bad thing or is that actually a good thing? The market's going sideways, right? Watching paint dry. Move, will you already? Move, stop, go up. You can't, impatience, right? And then right here, literally on this day right here, right? Literally on this day right here, when it just kept, trickle down a little bit. Oh man, this sucks. I'm gonna get out of here. Got down to one, penny, right? A penny 43, 43, whatever. I'm out of here. You get out, right? What happened? Oh, we up a little bit. We up one a penny 8. Oh, whoa, up near 2 pennies. Pull back, bounce off this moving average, goes higher, squeezes up to what? Two pennies. Oh man, this is crazy, right? You like, this is crazy. I just sold right here. Oh, you didn't honor the respect of the consolidation or the accumulation. There was no real true risk involved unless they gave you the press release, something to make you want to tuck and run. You just got impatient. A person could not deal with the aspect of the markets in a delta neutral position. Market makers are working. And then eventually when they let go, guess what happened? The rubber band effect kicks in. Out of there. It rubber band, right? It shot down. That kinetic energy, that momentum shot from a penny 5 and ran all the way up to what? 6 pennies. Sounds like a lot to me. Right? Sounds like that's a what? 600% move, somewhere around there. And that happened in the matter of what? I don't know, maybe what, end of July to what, beginning of August. So you finna tell me what, 2-3 weeks, right? 2 weeks, 1 week, right? 2 weeks, 1 week. You up 600% in 2 weeks? Stop playing, right? Stop playing. 600% in 2 weeks. Stop playing. 10 racks just turned into 60,000. I repeat, 10,000 racks, right? Or 10,000 racks, $10,000 rack, a $10,000 rack just turned into $60,000 in that move in less than a week and a half. Yeah, penny stock. I'm just using this as a case study. Of course, I'm not saying go invest in CPSL. We don't, we're not financial advisors over here. We don't tell people what to invest in. My disclaimers down in my description box. I'm just using this as a case study. Patience. Understand the delta neutral scenario. That's what it's all. It's hedging, right? You hedge by buying the dip. I don't know if you know that or not. I'd be the one to take, let the cat out the bag here. The secret, yeah, you're actually hedging when you buy the dip. Right? You're hedging against the downside. You're buying more at that point. It's cheaper. That's the whole goal. Buy low, sell high, of course, right? Yeah. You're buying more at that moment to kind of start the bleeding if you can. Every little share buy at that moment when the stock is pulling back is a positive for trying to keep the market stable. Essentially, that's what the market makers do. In some cases, right? That's their job, to keep the markets neutral as possible. Eventually, if the bulls outweigh the bears and they can control more of the float or the outstanding share value, then guess what happened to the stock? Oh, 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 okay, we're going up now. Oh, okay, yep. On up to the east side, George and Weezy style. We moving on up to the east side. Y'all know the song, right? Get excited. And then what it does, what it's doing right now, hits that peak, pulls back, and starts the process all over again. Look at that. Look at that delta neutral. Look at that. Ebb and flow. Now, delta neutral, 6 cents down to 3, back up. That's 3 pennies. Oh, yeah, but If you plan that middle, man, you plan that position, guess what? You solid. Now it's right back up towards that middle point. See right there? 0.045. Right back near that middle spot. Right? From the extreme low. Well, in this case, the extreme high was 7 cents, so we can't really use that. But it's at least from that point, right? Even though we went to hit 7 up there. But nonetheless, you kind of right in that sweet spot right there. And it's consolidating. So the markets are keeping it, neutral as possible. There's, values of, growth from the bottom up, and from the top down. There's still moments in there where profit is being made. But ultimately, the stock is still consolidating in a bull flaggish perspective, which is mandated by all natural design of markets. They supposed to go up and to the right at 45-degree angles. You hedge your position by buying the dips or buying puts against it, when it's obviously giving you that direction of bias. Right? Markets get overbought, you sell call positions on top of it, because eventually it's going to pull back. It's overbought on the RSI, it's overbought on the indicator, oscillator. Okay, I'm gonna sell me some calls right now. Right? Let me get this thing down a little bit cheaper. I'll take that premium, that profit, that net credit, and turn around and buy the dip with it in real time. Right? Which also helps my long position. I'm just hedging my long position. It's a form of delta neutrality there, even though in the odd sense, that's what's happening there. Right? Stuff is awesome. Guys, you guys keep my screen. It's not showing. Oh man, no wonder I got this thing up. My bad. I'm just sitting there going in. Thank y'all. I just looked over in the YouTube side. See, I forgot I had the banner up since we're talking about it. Thank you, over brother Mathis. I was sitting there breaking down this delta neutral on this CPSL, the different layers here, right? That layer, this layer, a consolidation down here, then this layer, and then the breakout, right? Again, it was at this point here where a person capitulated and sold because again, they wasn't patient. They didn't know that the market was going into delta neutral position. It was just going sideways forever, right? It got to this point right here, literally, right here. Then they sold their position. I'm out of here. They couldn't take it. Again, essentially, literally the next day, it started going up, and then it broke out. So they sold here. It broke out, went up here, and then every move up and higher, they start pulling their hair out. They start sweating. They were nervous. They just got they couldn't deal with themselves anymore. I just sold right here. Oh my goodness. Yeah, the stock went up. Right. So yeah, it's okay. Right. It's great to learn how to earn. Right. It's so great. It's okay for markets to somewhat, you know, force you to kind of bend to its will. Right. When you know that it's supposed to be doing, giving you the fruit of your hard labor. And it's gonna be the moment when you win and you're gonna take your bag, right? And that's gonna be that. But neutrality has its place. Again, it keeps things stable. Think about your long-term position. You want them to stay stable as possible and incrementally go up to the upside more than you want them to come down. Even though you feel like, man, I want to get it in a little cheaper, add more to it. But ultimately, if it's still giving you sideways action and small little divots and pivots here and there, then yeah, you have to sometimes add on those, right? Until it give you a substantial pullback. The growth aspect of it is still intact. Here, that's happened here. When it climbed from that level, it climbed from this stage to this level, from that level to this level, went up and made a breakout up here, hit all-time high here, pull back down, and now it's doing the same thing all over again. Starting neutrality within this peak to trough moment, right? Peak to trough moment, and now you're playing right back into that potential upside, right? Like one big giant. Well, in this case, you look at it from this way. You said, man, it's just one big old giant looking cup pattern here, trying fry pan bottom, right? It's more of a fry pan bottom there, right? It's a little different. Same thing, concept to sense, but it's fry pan bottoms, the J hook patterns. There's cup and handles, right? That's more of a frying pan bottom, like a frying pan, right? What frying pan bottom, right? Y'all see it there. Cooking a little, cooking a little bit there, right? Cooking a little bit right there. See, I do that sometimes. Let me do it, draw it so y'all can see, right? Right? Frying pan, frying pan. Put your little handle on that thing, right? Got your little, whatever you got in there. You got some eel in there, some snake, right? You got your little, your chop suey, your goat meat, whatever in there, right? That frying pan cooking, right? That gravy in there, that gravy percolating, pop, 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 popping, right? Yeah, y'all get it. But ultimately, that's a good signal, right? Because eventually that thing cooking inside of there, right? Eventually it's gonna what? It's either gonna, cook and become properly, seasoned right and consistency that you want it to, then you can eat it, right? It breaks out that day when you get ready to eat, excuse me. Right? That's when it's done. Right? That's when it's done. Right? Or in that case, of course, the stock what breaks out. Right? That's neutrality at this moment. That's a neutral point for people to consume, consolidate and actually, again, acquire more in their position, right? Add to their position. Dollar cost average in, compounding interest. Keep playing those principal pivot points or dollar cost average moment where you feel like this is good. And then eventually, you get that reward or popping. Right? If we just use the idea that, okay, well, if that's the peak and this is the low, okay, you take that line, right? And you say to yourself, okay, if we can get back to let's say even the neutrality point perspective, right? I should have turned it the other way earlier, right, and kept it held at that point. But nonetheless, let's just say for the sake of the scenario, right? So we're playing around that midpoint of consolidation where it's kind of pinging up at it a lot. We'll just say right there, just for the sake of the case study. You have an equal or greater move when it does break out at some point. Now, even though you're supposed to take the length of the entire consolidation, and that could equate to the length of the move that potentially could happen or come out of this, which that was to put this stock here, just from this case, we say from here to here, we'll just do it for the sake of conversation, right? And we take that line right there. You take that here, put it at, let's just say at the most current time, because that's how you got to do it. Just go to the most current time. Sorry about that. Take that line up here, right? It's somewhere around there. That puts that breakout somewhere around there. That's just hypothetical, of course, if it was to happen at this point. But you building momentum is my point, right? Just going from 4 cents, 6 cents, 7 cents, 7 cents at the peak there and breaks out and goes up to near 14 cents. Well, guess what? That's another what? That's another big major move. From 7 cents to 14, that's like a what? 100% scenario, right? In essence, in terms of it completed itself. Even though we know there's incremental gains that come when the stock is under what? Under 10 cents. You get to eat from what? 7 cents to 8 cents, right? From 7 cents to 8 cents, that's 100%. Inside of 10 cents. Let that marinate for a moment, right? Then it goes from 8 cents to 9 cents. That's another 100% moment. You doubled that, in that perspective of movement within that. Now, of course, when it breaks out above that 10 cent, then you can start, tacking on the value of that, from a, value up until, it doubles in itself, right? But nonetheless, again, that's up near 14 cents, right? And it started down here at 0001 just last year, November, right? Hey, Sister Angie, I just say it says out of focus. Oh, yeah. I noticed that with YouTube lately. YouTube lately, since they've been changing out their, I guess the algorithm or however, you have to go to your phone, your cell phone, click on those three little tabs, right? Then go to quality, right? Go to quality, and then tap 1080 or 720, right? I think I'm broadcasting in 720 right now, right? You click on those three dots at the top right hand corner, go down and hit that word quality. Click on that, go to advanced. After that, you see that, go to advanced tab, click on the advanced tab, and then click the type of quality that you want on your cell phone. That'll put you at the highest clarity or definition, high definition value of it. Right. So it should be at 720. Right. I'm broadcasting at 720. Right. I'm about to get an HD camera. I'm already trying to get the sound system right. I'm always going to upgrade my little camera. It's still doing the job though. Old Bets is still working. We still together. Right. But yeah, so that's a part of that, guys, what I'm talking about. So I just want to discuss that. The importance of delta, delta neutral positioning, delta hedging, it has its place. Right? It has its place. Now, again, I'm not saying CPSL are going to break out and go to 14 cents over the next 3 months. although, or 2 months, I should say, although I am hoping that it does. I am hoping that it does. We got news coming out on CPSL. We're just using it as a case study. Of course, in this time, I'm in it. That's why, I was just going over this with another, with some training before I came on with you guys, doing some training this Saturday, and using this and many other stocks in that perspective. But yeah, of course, that's my entry price of 0005. Even though TD Ameritrade dust itself rolled me up to 0006 when they did that ticker symbol change, right? I want my little incremental 5 as opposed to 6 show up, right? But that's my entry price, 0005 on this stock, and I'm just looking for it to go anywhere above 10 cents. Is that too much to ask for, brother? Right? Anywhere above 10 cents, that's a nice bag, right? Of course, if it goes to $1, then yeah, I love that, right? We're gonna party like it's 1999. Right, 0005 to $1. Yeah, I take that. Right, right. I'll definitely take that. Right, but yeah. So case in point, again, like I was saying earlier, S&P 500. Right, this is the elephant in the room. Right, this is the one that seems to give people headaches. Sometimes, and other times it cuts the check. Right? Cut the check. Right? Cut the check. S&P 500. Stop playing. Cut that check. So what do you see right here when you look at this pattern here? When you look at this scenario right here in terms of the movement, right? This is on the daily chart, right? Right. This is neutrality. This is a gap down here, march back up, hit the resistance at that point of filling the gap down again, run down, right? Gap up, go sideways, try to go back to resistance, back up there, fails, right? Well, it failed on this candle here, actually, right? I just got that white line there, but it failed here miserably here. So essentially, again, you got a lower high, lower high, lower high, right? All the way down from the all-time high, you got lower highs, right? Lower high, right? Here, same scenario. Even though you lost that lower high and you gained back some here, but you still lost it again here. So there lies the new lower high right there. If I got all those lower highs, that means essentially I'm still in I'm still in the downtrend. Still in the downtrend, right? That says a lot about being able to kind of corner the markets, right? It's again, it's well, it's fine, it is okay, right? When the markets are giving you that, it's okay, right? Because you're gonna see that, you know, this stuff is gonna be really, interesting as it obviously builds more momentum. Now, but from what we know about downtrends in terms of lower high scenarios, right? That obviously denotes a downtrend. If it's still not, providing you the lift off that's necessary to kind of get back to some, key levels of resistance, or what they call trend change or momentum or sentiment change, then guess what? The rules of engagement still apply that the stock is under pressure. Now it's weird. It's not weird, but it's weird. The market's kept, see right there, that 20-day moving average right there pretty much tells you the entire moment that the market went through Friday, right? Of course, it was just this thing is watching paint dry, break out already, right? Go test the high of the previous day, 441, or break down and come back down to support around 435, right? What did it do? Look at that big old ugly block, right? Look at that block right there. It opened at 439.48, had a high of 439.89, had a low of 437.19. Let that marinate, right? It stayed within a tight intraday window, about 2 basis points, right? And closed down 0.18% on the day. So who really won that day? Nobody, but everybody did, right? If you were able to kind of play those pivots best you could under the conditions, right? Look at the hourly chart. Hourly chart shows what? Beginning of the day, flushing, flushing, right? Not just flush straight down, but it was slow methodical. This is on hourly chart. Keep in mind, you didn't hit the low of the day until it got to what? 12:30. Right? Guess what? The puts I swung from the previous day, guess what I sold at around there? I was tempted to sell in this candle here. Matter of fact, I think I sold like one in this candle right here, because this candle was just a headache. But around this point here, around the 11:30 area, in the 12, I was like, oh, this is ridiculous. They just killing it, because every time the market seemed to go down, it shot back up. I've seen that before. I said, I know this. I know this here, right? Right? I've seen this before, right? You know, I've seen this before, right? And then it got down here. I said, oh, we're gonna break out or we're not. And just look at that weight. See, that's them protecting. That's them trying to protect that 200-day moving average, right? They were protecting that gun line all day. They were trying to protect that 200 moving average on the hourly chart. And move away from it. They try to run it back up there close to it, just killing the momentum or the sentiment of the bearish traders. Right, when you think it's gonna just dump, you're like, okay, here we go. And then this candle right here, that was just rip your face off, bullish and engulfing candle to run the market all the way back to what? The zero or the reset button. Couldn't make this stuff up. Couldn't make this stuff up. Right? That's market makers. People say, well, some news or something came out, whatever. Yeah, look, they people trying to stay delta neutral. They're not trying to pay out a ton of money for call buyers, and they trying to definitely not pay out a ton of money for put buyers, because the market is definitely trying to stay neutral as possible to kind of ink out slow incremental gains back up to the upside, control all this volatility, right? The name of the game is to kill the volatility. Volatility causes the market to expand, get out of control, unravel. That's when you make a lot of money. I love volatility. I wake up in the night, volatility, like Tourette syndrome, volatility. I love it. I need it. I want more of it. That's when markets get out of control. They can't control it. Why? Because the dealers are trying to control the scene. In this case, you got the Fed, the Federal Reserve, Jerome Powell, and you got market makers. Then, the henchmen, the banks, hedge funds, people like that, BlackRock, JP Morgan, all those types that, do these reverse repo operation scenarios, and Citibank, all that stuff. And yeah, there's a lot of players out there. They have a vested interest to kind of keep markets propped up, because they got clients that they answer that want to make money. Majority of clients that go into a hedge fund are not saying, how can I short the market? I need a short manager. No, I need I need a person that's going to grow my money to the upside. You got to do that short stuff on your own, or find you just an exclusive short selling firm like a Jim Chanos or Andrew Leff, right? We know who the major players out there, or Dr. Michael Burry, right? Mr. Bet it all to the downside himself, right? During the financial crash, Michael Burry, he have no, problem that, I'm a notorious short seller if necessary, but he got long positions too. But he definitely will short a good, overbought, frothy market, and tell you how he's going to do it, when he's going to do it, when he takes his position, and let you know, I'm essentially betting against your market, right? He's been successful at it before. Of course, you can say, oh, look, whatever, call it what you want. He became billionaire by doing so. Right? He became a billionaire by doing so. So again, that was your marketplace for Friday. Again, just talking about that delta neutral positioning of it was just, oh goodness, this thing I want to just, oh goodness, won't you just? But it did all it did. What it did, look, it gapped up the previous day. It pulled back some of that, and I didn't come all the way down halfway. At least it could have got down like 436, right? Give us 436 at least. If you closed at 438 something, give us leave 436. It got close here, of course. Let's go as close you got, right? 437.19. They held that 437 gun line. Over here, you got, again, close to it again. It could not, break that low. So essentially, they had established the floor for the day at that point. Unless something was going to have to happen on the back end to change that. The floor had got established around 437. In this case, 437.19. Those puts I had right there, I was fortunate to get a little, majority amount. One here, another one here, and I sold into this big candle right here when it saw the spike. I said, I'm done. I'm not finna play with this. It's weird too, because I had another one in another account, right? That I had swung from the previous day, but the expiration date on it was for Monday. So I still had time on it. But in my mind, I felt like, okay, I want to deal with this chop, right? But no, I bought it for Monday for a reason, purposely, right? But when it start coming down like this at the end of the day, that's how they did it for the last couple. They start waiting till the end of the day to unravel the market. The premium start kicking up really fast, right? Because it started just dumping, right? It was like volatile, got volatile quick, and it started dumping. I said, okay, right, let me take some of that profit, right? I think at that point I was up in that position, maybe what, about 70-80% on that call. I said, I'm gonna take it. Yeah, I'll take it. Yeah. And I still got swing call, just for the sake of transparency. I do got some swing puts going in the next week, right? These are the positions that I put on once we got back up near that 20-day moving average on the hourly chart. Right? I was just playing the fact that, okay, if y'all gonna play this game and roll it back over, then I still like my chances to the market, to play neutral or to the downside more so, unless they come up with some kind of superlative news to change the market trend, because all of the stuff that we want to know about the markets, it just came out. Non-farm payroll, the job claim numbers that came out Thursday, right? Oil numbers and all this stuff. All this. Look, we kind of know what's going on here. The debt ceiling being extended to December, not necessarily a win for the Democrats, right? They still got to go back to the drawing board in December to deal with that debt ceiling. And then on top of that, after they got through all that, and they were fighting back and forth, infighting themselves over the, talking points when they got before, the constituents, Chuck Schumer talking trash. Then guess what? Mitch McConnell talking trash today. What, yesterday or today? So, yeah, they still got a problem. We just extended it down the road a little bit so they can figure out what they're going to do. Either they're going to use the reconciliation process to get this passed so they can, fail miserably trying to pass the infrastructure bill later down the road, or they're going to have to figure out, how to relinquish a lot more of the power that they got now to get the debt ceiling passed. And then, yeah, maybe later on they can go use their little dirty little reconciliation to pass the infrastructure bill. But right now, we're not going to participate with them in it. Right? That's the game. But anyway, that's a form of debt, delta neutral, right? Delta hedging. See how that works? Even in politics, it works. Couldn't make this stuff up. No winners on both sides. Everybody taking, staying neutral, right? Nobody, no winners on both sides. See how this stuff works? So yeah, there's a lot that goes into this, but you get better. You know how to get better, right? You get better as time unfolds in this. So yeah, we still got the gap, back down to what, 434, 435, and you still got what, uncompleted gap at least back to the bottom of that candle there around 442. It came close here at 441.67. But hey, there you go, 442.65 at the bottom of the base of that bottom of that candle there, beside the wick. Even if you use the wick, that still puts you at 442.31. Still has a gap to close up there from the gap down here. As of now, bulls are showing weakness. They cannot even get back to some of their usual gaps that they used to do back in the days when they felt like the markets could do no wrong, buy the dip, and just kept buying dip. Now, guess what? That business model don't work so much. Look, the bigger picture, linear regression band is pointing to the downside. They got to turn this entire linear regression band back to neutral, sideways, and then eventually back to the upside. Let that marinate for a moment. That's a bigger picture perspective there. And it's sitting up here at the top level of the band. Maybe markets are trying to price in potential what might be coming. We don't know. Hey, stay tuned for the next episode of Dragon Ball Z. Hey, whatever. Right? But that's how you play this, in a way where it's trying to play you. Right? Like I always say, they're trying to go in your pockets. Your goal to make sure you stay digging in their pockets. Make sense? Right? And you guys built for this. Right? Y'all built for this. As they say, built for the kill. We built for this. Right? So again, that's on the hourly. Right? We looked at the daily. We got our inverse head and shoulders play. We called it. We played it. We made money off of it on the gap up. And now the market's kind of pulling back, off that big massive gap up, right? You hit basically oversold, or you tapped the oversold, overbought on the RSI when that gap up happened. You went up and tried to test it, throughout the intraday, then you fail because you couldn't break and make a new high. And then you pull back. Now it's just pulling back. Now it might be trying to establish a new consolidation at or around the 20-day moving average on the daily. The hourly, which puts it around about 437.55. Now guess what? After hours, 437.42. After hours, what did the market do? It actually came down and broke below that slightly. It came down to like 437.10 20 or 30 somewhere around there. We'll settle that somewhere around there. But still, ultimate bigger picture is still what, showing lower highs. So it's still in the downtrend until it changes that. So yeah, you may try to get a market to try to fight back Monday, maybe. But the way that it closed lower than it what? After hours, it closed lower than what it closed at during the intraday hours. That ain't necessarily always a good thing. It closed lower than what it closed at during intraday. So any, adversary news that may come out over the weekend, already into a bearish close in the extended hour session, yeah, that may cause it to maybe potentially think about coming down towards that 436 area. That's that first level of support around 436, 23, 25. And then eventually getting down here near that 434, 80, 434, 435 area, basically whole number mark, right? Around that 435, 12, 435, 10 area around there. If not, guess what? We already know the place they're gonna have to fight to continue to get back to the upside. 439, 08, 407, somewhere around there. After that, these guys right here at 439, 60. If not after that, these guys over here at 439, 89, 90. After that, this big old bearish and go for counter right there, right? Or the bottom, at least those guys there at 440, 78, 79. Then the top of that counter around 441, 12. That's how you map this stuff out. Essentially, that's how you do the stuff. That's how you place your little pivots, intraday pivots, right? But again, markets just played the game of trying to stay neutral as possible throughout the entire day, which killed a lot of premiums. But some people still make money. I made money on my puts. Took me a minute to do that. Had to deal with a little bit of decay, but I still made money when it flushed, and kind of made its way back to the downside a little bit. I had got out with that little bit that I had needed. I'm out of there. Right. So yeah, just speaking about that. So I just want to touch on that again. Nothing really, complex today. Just want to speak on the idea of delta hedge and delta neutral, since people in the family had brought it up, and just turns the value of it. Of course, when you talk about strategies, of course, we know that's more of a strangle position, right? Right. That's delta neutral. Delta neutral in the options world is known as a strangle, right? Behind the same underlying asset at the same strike price. In some cases, right? Keeping the market in the box, right? And you can do straddle the same way. Straddle just say, okay, I'll buy, right? In this case, let's say the market closed at 438 yesterday, right? I'm going to buy the 439 call and the 437 put. That's a tight window. I'm going to straddle that middle line, right? Either direction that it breaks, if it breaks for either or, that's the other side. I'm going to close that side. I'm going to ride the other side. You're just trying to have protection. You're just trying to keep the market, focus in a point where it gives you the opportunity to say, well, we're going to break now. If it does that, let's go. Right? Those are strategies. But essentially, those are strategies. Right? So yeah. So again, hey, all this stuff is great, right? I don't know why I should have expanded the chart. Right. But this stuff is great. Right? There's a lot that you can take from this, right? One thing for certain that we do know, what kept the market in check from trying to break out to the upside was what? A good old buddy fatback. But that 10-year treasury note was kicking butt. It's been kicking butt ever since it broke out into the last month. It hadn't looked back since. Haven't looked back since. This is problems. They don't want them problems, right? How that little song go? Them jokers don't want any problems. Let's go to the daily chart. They don't want any problem. That thing in a look at that sine wave right there. Look at that sine wave right there. Look at that peak. Right? Look at that trough. Headed back up to the peak side. Boy, they don't want them problems right there. And the volume ain't coming in. That means people been dumping bonds. When people dump bonds, yields go up. They've been dumping bonds. Fed can't buy them fast enough to keep people from dumping them. They just sell it into what? Right? They dumping in the Fed's buying. Right? They sell it in the strength. Essentially, they're selling in the strength. Got him. 10-year treasury note breaking out, going higher, that means that's bad for what? Ooh, that's bad for a lot of growth stocks. High flyer, high PE ratio type of growth stock, them gonna be the first ones to get hit. The higher the 10-year yield, right, rises in terms of people dumping bonds. So Apple and Microsoft and Google and Facebook and Amazon and a lot of other ones too. They're gonna have to struggle to eke out gains. Now they can still go up, but they ain't finna be doing all them crazy moves. Since that's what kept the market in check. What Friday? Apple was basically just down for the most part throughout. They barely hit green, go back to red. Barely hit green, go back to red. Microsoft tried to buck the trend, go up a little bit, but all those were in check. They couldn't just break out like they used to been doing. Meaning, hedge funds and people like that, they had no place they could run and hide in for the day. They were just trying to find somewhere to hide out in. But they know during yields are breaking out, the only place you can go is really energy stocks or utilities, stuff like that. Those are defensive type plays. It's a way of being delta neutral against what stocks that you love being in terms of what growth stocks, right? Apple and all that. Okay, now I have to go buy these other stocks. The energy, some of them maybe whatever. Maybe the financials, right? Yields are going up. They can make money finally, right? Them crooks, right? XLF, right? So yeah, that's the game. That's a part of this game, guys. Right? So again, you guys got something to work with. It's just understanding how this stuff works. You're gonna get better. Again, you're gonna get solid. You're gonna be able to read this stuff across the board, and you'll know how to position yourself properly when necessary. Right? Definitely when necessary. You'll know how to read it. Right? Y'all know how it is. Because bearish traders were out. They were out, bro. Look at the bears were out Friday. They're like, well, we're gonna get this joker today. Right? We're gonna roll over. You got that gap up. We're gonna get them jokers. Right? I was right along with him with some because I swung my puts. I had some puts swung into the day, right? And I had one or two calls, right, against a good little amount of puts, right? Two calls to what I had 2 calls to four puts. My 2 up, 4 down strategy in that perspective. So I'll stand at at 9:30, right? At 9:29, I was at the gate of the market, right? Like everybody else, right? This was me, right? This was me at the gates 9:29 Friday, right? I'm at the gate, greeting all the little, all the bulls and everybody. I was at the gate just like that right there. Like, yeah, boy, we finna eat. We finna eat. Right. And then, market makers did their magic. They were trying to hold the market. I was like, man, they hold this well in the 11, 30, 12. They still ain't dropped this thing yet. They trying to, they want to, then shoot it back up. That's oh boy, here they go. Oh, okay, it's gonna be one of them days. I just want, hope they don't kill out of my premium, my theta, you know, until I can get a chance to, at least get some of that premium out. And I was still doing good because I was in the money in most cases. But still, that don't always save you. As more time, ticks off the clock. Yeah, you getting close to getting well. You know, having to make a decision, even when you're in the money or make a little money. You don't want to give those gains back. Right. So it's all right. It's all right. Right. So yeah, so we again just want to put that out there. So that's I guess the quick version of delta hedging, right? Of course, it's the same when you go to bar chart and go through all the uh, you know the ideal of strategies, strategies and stuff like that, and uh, you know strangles and straddles and things of that nature, right? And how well they paid off or didn't pay off, right? Because the market was fighting. It was fighting, right? It was fighting, right? Short strangle, long strangles, right? Short straddles, right? Long straddle positions, right? Being able to capture, 16, 17 cent values on the delta, right? You know, Again, a lot of stuff like that. Of course, if you go over to let's see here, let's see, go to bar chart. 2 seconds here, right? So right here, if you hit the straddles and strangles tab, the SP 500 for that day, strangle position. We know what a strangle is, of course. Right? We know what the you know, what a straddle is in that perspective. And these were basically what we were dealing with, throughout the day. Of course, you can refine this down a little bit more, but in or around that price, of course, 437.86, 430, 8, whatever, just in a box all day. Right. So if you were trying to buy the 438 call, you try to buy the 405, people buying 405 puts, all this, doing these legs, right? All these complex legs, right? Being able to capture net credit of 2 cents, right? Basically $2, right? But you got to buy a ton. You can buy a ton of them, right? You buy a ton of them at that price. And if you get any incremental movement, that's still positive. That's still gains. Those are delta neutral type positions. Essentially, that's what they were. They were delta neutral type positions. Where even 2 cent incremental gains and stuff like that, 4 cent gains and stuff like that was a lot. If you got a lot of positions in those legs, when you get getting a net credit aspect of that, not paying a whole lot to acquire more, right? It's the same could be said for the strangle, right? The long strangle. See right there, eking out 3 cent value and credit value, 2 cents, whatever. Some of them obviously pay a little more at 21 cents at that little leg right there, right? 438 call against the 437.50 put. Of course, that was more in the money, right? In that perspective, yeah, it gave you 21 cent, net debt or net credit. When you had to have a lot of contracts to make that 21 cent be about that life, right? right, right. That's a neutrality market, even for those guys who trade in neutrality. Goodness, right? Like God, oh boy, they stingy with it, right? Straddles kind of somewhat the same way, right? Short straddle value and also the long straddles, right? These were again the things that came out of Friday, right? That's you see the expiration for Friday, right? Somewhat around the same price value. See right there, net credits all around about the same numbers. All right, so yeah, so I just want to touch on that. So again, if you figuring this stuff out, learn it. Of course, there's a lot. Of course, the winners were the people who bought the butterflies and the iron condors, right? Those are the guys that man, they won. The market was just going sideways for the most part and spazzed down and spazzed right back up. So you had that quick volatility, implied volatility that happened within those legs and shot the market right back up. Those were the guys that were making bank. They were playing those tight positions too. Look at that. Some of the guys were making good little bank, stuck in them little tight little snares like that. Right? Those are those guys jumping out there, tackling the butterflies and stuff like that. Iron condors kind of fall within that same parameter to a degree. That's neutrality, right? That's neutrality. Look at the numbers they was putting up Friday. Look at the numbers they was putting up. Right? It's crazy, right? Like it's crazy. Now that's how this stuff works. Yeah, you can. I tell people that you can make money trading a neutral marketplace, right? Of course, you got to have the capital to be able to deal with condors and butterflies like that. It's not like just buying premium, right? Buying premium outright, right? So short condors, long condors, right? These are great strategies that you can learn, right, over time and get better and proficient at, being able to utilize these strategies when you have markets that are just acting very stubborn, right, and don't want to really give up the gains, right? Give up the gains, man. Right? You have to pitchfork your way through there, right, with the torches and German shepherds and flashlights. Top flight security, Craig. You ain't no top flight security, man. You can get shot, man. Sit down somewhere, Day. Sit down, Day. Yeah. But those were the winners, right? The condors and the butterfly, positions out there that day. Some credit and debit spread scenarios, but that's all right. Again, you had to swing into that day, or play the pivots. You got to play the pivots, like a Jalen Rose or Allen Iverson crossing somebody ankles over. You got to catch those pivots right at those points to play your intraday, spaz up premium call by, right? Again, the only one you got was that big, man, look, that candle that, that turned off the lows when it was getting ready to crash, or I say crash, but when it was getting ready to turn to low, and all of a sudden it turned on the dime, right? That was the only one that you really had a chance to really, play your intraday, an intraday move, right? Because that was a big candle. I saw that. I was like, oh, that's demoralizing. It literally went from 437.30 all the way up to 439.19. That was almost 2 full points, within that hour. And a lot of that came, inside of that hour, right? Let's go to the 5-minute chart, right? Right. So you can see it more in depth, how they just played everybody, right? Let me change over here. Sorry about that. Where we at? Okay, here we go. So right here, see right here, they turned the market down. That candle right there, that was the one I got excited for. I was selling. I sold a little bit of puts ahead of. Man, look, I sold them last two I had in one account in that one, and I was like, man, I'll let the other one ride out, because that candle right there was like, yes, finally. Like goodness, it was just going sideways to barely down all day. It just, as soon as it fight down, it fought right back up. It fight back down some more, then it stalled a little bit. Fight down a little bit, run it right back up, killing the premium. And then eventually it broke from the midline of the linear regression band, especially on the short-term time frame in the 5-minute chart. It broke. It got rejected at 20 moving average and the linear regression band together, with even a more confirmation of a short. If you bought that life, know about this stuff to that nature, if you initiate it, right? It broke and gave you the flush down that it really needed to do. It came right down to a 20 moving average on the 5-minute and bounced at or around it. I said, look at these dirty jokers. They're gonna try to pin it there. They did. Look at that. Ping, 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 ping. And then it bounced and went higher. And after that, it was a rip your face off rally to the upside. They just grind out to the upside. They just mashed up the puts, right? Those who didn't get a chance to sell here or even here, it just grinded all the way back up over even the old resistance. Just grinded back up, just mashing up all those puts, right? That was your moment to get greedy in the calls, because you had a 20 moving average floor at your what? At your back door. Intraday, late today still, but nonetheless, 437.30-ish was your back door. And this grind all the way up here to 439, 13, about then 2 points. That happened in a matter of what, 1335, yeah, about near an hour, right? Close to the hour, close to the entire hour, near 2 points. After that, sideways back to that again, right back to this point where I almost started from. Look at market open up at around that point there, somewhere around there, that straight line there. Neutral marketplace played that line all day, but it still favored more bearish than it did bullish. Even though this move right here, that was definitely bullish. Like that was the only time bulls could have really, got excited, unless they caught this one here, this early big candle here early in the day. Because that right there was another one that just made me like, these people finna play with our emotions today. Ain't no in the world. It dropped like this. Of course, we like the drops. You say, well, that's good. Y'all got one too, because y'all got a big, bearish, pull back, in the open too. Went up and pulled down like it was gonna dump. They saved it. It went sideways. You had a what? Double bottom there. It bounced, came back, and then it shot up. Look at that candle. And then it rolled, sideways, whatever. But nonetheless, hey, good lessons learned, right? Good lessons learned. The market just essentially went nowhere, but it went more down than it did. It went up. I know that much, right? And weirdly so, on the 5-minute chart on the linear regression band, look what it did. Ping at the top of the band there, rejected. Ping right here on the top of the band, rejected. Rolled over. So they couldn't even take, break out of that zone. Smart people saw that, oh, I'm shorting. Pull back, run back up to that again, made a lower high off that initial high. I'm shorting more right here. Roll back over. It did. Right? Gotta love this stuff, guys. Gotta love this stuff. Right. That's what we studied for. It's exactly what we studied for. Right. So we're going to be prepared, right? We're definitely going to be prepared going into next week. And, we understand how this stuff works. So it's no, whatever, right? We're going to be ready, right? So just kind of put some context to it, extended hours. What did it do, extended hours? It went lower than what where it closed at. It closed up here and finished down here. Yeah, people like, well, that's the spot, man. It could turn easily. Yeah, of course. But yeah, that still ain't good for bullish traders. After they had a day like this where just chopped out, just chopped out sideways, it still favored more bearish than it did bullish. Ultimately, why? Because I can back up and look at it from a bigger picture. Yeah, that still favored more bearish than bullish. It was just an ugly bearish. It was an ugly bearish, day, and an even more headache value laden bullish day because you had to catch this bounce literally. That was your honor moment to just get excited if you was a bullish trader on that bounce right there. That candle that caught everybody off guard, so they can't even play for that one, playing for that. They'll be live. They said they traded playing for that. Now, even though it did bounce on the 200 moving average on the 5-minute here, but they didn't plan for the length of that candle being that big way over there. They did not. They did not. Right? They'll be lying if they told you they did. Some people say, "Well, I did actually." Oh, whatever. All right, maybe. But here, this right here was more okay. Grinded. You grinded your way back up. You showed that you was about that life. You turned it. You clipped the old resistance there, right? And then you grind on and went higher from that point. Of course, if you bought the pivot down here, that's when you made the most money because it was at the bottom of the aggression band. That was your pivot. They held it there. They gave you 3 tries at it too, 4 to be exact, but they gave 3 notable tries at that point right there. That candle there, and that one there, definitely there. That doji there, that was ascending candle there. That was the initial candle. That was the all systems of go candle. And then what it went bullish engulfing, stop a little bit, bullish engulfing, stop a little bit, pivot at 200 moving average, catch your breath, drink you some lemonade, Kool-Aid, right? Drink you a smoothie, some sea moss, whatever, and then ride out a little higher. Next leg up. And then you hit resistance at these guys up here, the top guys up here. Then you hit resistance around those guys. After that, it was roll over into the close. It's markets. Barely above the 200 on the 5-minute, slightly below it down here on the 5-minute, right back above it over here, right back below it at the end of the day. Essentially closed below the 20 moving average and the 200 moving average on the 5-minute on the intraday chart. Now, both of those are bearish signals, and the 20-day moving average crossed over the 200 moving average to the downside at the end of the day. Now, these are 5-minute candles, of course, that's different, but still, that's a bearish sentiment. You closed bearish, right? You closed bearish, period. All right, so y'all get it. So yeah, so that's enough, right? Let me get out of my Dr. Barry moment, right? All right, let me get out of my Dr. Barry moment. Right? Cassandra, right? That's his name on Twitter, right? Right? Michael Berry. Right? But anyway, so that's it, guys. So a lot of good information there. Delta hedging, right? Just in a roundabout paraphrase version way, right? Trying to make it make sense, right? Layman terms, right? So what I'll do here, if you guys want to, if y'all want to come on and build, it's a Saturday. If you ain't got nothing to do, if your favorite college team then went off, right? Y'all got the floor, right? Y'all got the floor. If y'all want to come on, if you're able to, right? Want to build with the family, right? Go in there, maybe break down your charts or break down some, some talking points of market value. The floor is yours, right? I love being in student mode a lot. Love it. I love it, right? And just in listening mode, period. Not even just student mode, but just the idea of listening, right? That's what we're here for, right? We listen with the intent to learn, not with the intent to kind of respond. That's what makes us different, right? We respect knowledge, right? We're not trying to act like we know it all either, right? I love this stuff. I love this stuff. Eat this, sleep this, breathe this, own this, am this, right? Right? Love this stuff. So there's the link, guys. If y'all want to come on, I'm gonna be in more listen mode. I'll be the first to tell you it's the weekend. Right, it's the weekend. I had some training to do this morning. Right, so yeah, I rarely get days off, but when I do, I try to make sure it's useful. Right, it has its place. Right, everything that we do has its place. Right, so there's the link, guys. If you want to come on and share a little bit of your day, a little bit, however, whatever. Right, there's that right there. All right, there's that right there. Let me post it over here. Some of these portals. All right. Let me post over here on the Facebook, right? You know how I feel about Facebook, right? I call it Facebook. And then post it over there as well. All right. So just in case somebody might just be chilling on a Saturday and got nothing going on, right? Right. They coming to get them some them a fresh dose of information. Right. And make sure I gotta keep from remembering to put it on public too on the Facebook side, because Facebook be on that, keep it private, right? Or keep it within your friends only. Right? They so hateful over there at Facebook. I can't stand them. Right? They so fraud value over there at Facebook, right? Mark Dusty Self. Right? That whistleblower boy, look at him, a thorn in his side right now. Mark Zuckerberg is over there, man, just chopping wood right now, boy. He woof woof. He can't take it. Sister Angie in the building, already in the building. Right? Peace, power, and profit to Iba.
Peace, power, and profit. Oh my, peace, power, and profit, everyone. How you doing?
Yeah, doing great, doing great. Just never, just being in a position where we can kind of keep building on, valuable questions that come out of the groups and the different layers, and just keeping people, keeping them hungry, right?
You,
To the
you were.
knowledge. Right?
I'm sorry. I'm always interrupting. You were talking
Oh,
about compound interest, and it reminded me of the stock reinvestment program on the different apps. You know how they let you reinvest dividends, the interest from the dividends, or
yeah, it's called a drip, right? Dividend reinvestment,
right.
program. I
But
call it
on
jobs.
right on Weibo, it has the Let me see, what do they call it again? Yeah, I'm sorry. They call it the. It's like it takes the interest that you get and it lends it for the shorts, for people who are short. Let me get the correct meaning for you. I gotta go in. Oh my god.
That's all right. Take your time.
Okay.
Yeah, they have those a lot of those little strategies, like, well, not call them strategies, but I should say program, where you can still, making some money by, kind of helping those out on other sides of the market.
Well, okay. Well, you got the idea. Like, is that good or bad? Is that a good thing to be in if you're trying to? Because some people in the, like, say in the comments, they're saying, de deselect that, like, come out of that.
Well, it depends on your understanding of it, right? Or the benefits thereof that it can provide. If you're able to account for it, then how can it be a bad thing if you're able to actually make some money off of it? You see what I'm saying? Obviously they have it there for a reason, but of course you have to be willing to understand all the rules, of engagement dealing with it. If they're going to take your interest value of growth that you made in a stock, if you made profit, turn around, loan that interest in nominal value or notional value money to that of I don't know if it's shares or the actual money itself, to those who using it for margin, to now turn around and short whip. Either way you look at it, they got to pay it back, right? Because they got to close that short position. So if you gain money off that in that perspective of the interest by loaning it, then that's still a net positive, right? Well, like, they're using to short the market. If that's the case, if they're giving the short, say, well, look, hey, look, we don't love them, right? Look, we dealt to neutral, right? Right? We need the bearish or bullish. We're more opportunists. Make sense?
Can you hear me?
Y'all can hear you
Can you?
now. But,
Oh, hold on a second. Hold on. It's called the stock lending. It's called the stock lending income program. So when you sign up for Webull, you're already a part of that. You have to it's like a default. So it's the interest, you'll get interest on whatever they had lent out, like for the shorts, to cover shorts and things like that.
Right.
If you don't deselect that, some of your interest goes to cover those shorts. You
So it's another
understand?
way that they build margin. That's another way that they build margin without having to really go to a what? Outside lender like a Citadel or Melvin Capital, like Robinhood. Robinhood got
Right,
problems, right? Robinhood
right.
got a real problem over there. This is how they use their community to help fund their margin.
Okay.
Essentially, again, if I'm hearing that right? Because I've
Yeah,
seen it, but I just never read into it personally myself. Uh, in all honesty, in that perspective. But that's what it sounds like.
yeah. It is actually what you're saying.
So, that ain't necessarily a bad thing. But if you say, well, I don't want my money going to help other people, they broke. They've been found to get themselves right. Then yeah, you deselect, no big deal. But nonetheless, they can't negate your account no less than what you ended it with when they were obviously borrowed money from it. Make
Right,
sense?
right, right, right,
If not, they'll be a default of the what? The SEC regulation rules like that. Hey, you owe me, bro. Take
right,
that thing
right,
to trial. Let's go to trial. I'm gonna say, no, I lost 150,000. I need all of it back. SEC law. I just get, but no, that's the difference. They're using the community to help fund their margin.
Okay, okay. No, I just wanted to know that because, like, say the AMC stock, right? Um, I don't know if the 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 apps that are allowing, or the platforms that are allowing us to trade American movie. What is it? What is it called? AMC.
Oh, AMC? Yeah,
Yeah,
the movie theater. Yeah.
yeah. Because of it being a meme stock, and it going through such volatility, etc. I don't know if they use the stock lending program, like, to help keep that in check.
Well, again, if it's tied to their overall, you know, financing scenario, meaning how they, bring money in or not, then it's equal opportunity in essence. You know what I'm saying? Um,
Okay.
I would think, I guess, I would think so. It's fair game across the board. You know,
Yeah.
now, of course the apes don't like that because they're in the conspiracy that what everybody against them, everybody, short sellers, market makers, Federal Reserve, Joe Biden, Trump, they don't care whose side you're, everybody against them, right? Ladder attacks and short seller reports and not allocating the account for all the shares that's out there. Y'all seen this stuff.
Yeah.
Yeah, we know Wall Street shady and got some practices out there that may be under cloaked and behind the scenes, or it don't really catch up in a way that it should be reported on these OPEC sites and short seller reports and this, that, the third. At the rate that it would be like settlements, like T1, right? T+1, T+2, T+3. That the time that it takes for money to close out position, settle, and be back in your account. You see what I'm saying?
Mm-hmm.
There's leeways in that depending on how that worked in terms of that middleman, right? Because we know how money moves when you move money through Western Union, ACH transfer, right? It has to go
Mm-hmm.
through what they call a layered, system, right? Synchronous acknowledgement if you're a computer geek, right? It has to go through those layers, right? The packages have to be disseminated, broke down. They have to check it for fraud, this, that, third, repackage it, then send it on its way.
Right.
You see what I'm saying? That's how that stuff is set up in that perspective. And sometimes that data don't really reflect its current state until it goes through that process, right? Unless you can
Mm-hmm.
just follow it like that. Now, the only thing that does that, honestly, where you can watch it from start to finish is what?
Mm-hmm.
What's the only value model out there that does that from start to finish, where you can watch from its start to its end and see every aspect of it? Do anybody know by any chance?
I don't know. What do you mean, like, in which platform allows you to see that?
Yeah, or just what asset class, any kind of particular framework of financial institutional value out there, government. What's the only thing that does that on the planet Actually, I'm gonna go a little deeper now. What is the only thing that allows you to see it from start to finish on the planet? Now that's a trick. I'm throwing it out there. I'm making it very somewhat easier now because there ain't too many things out there that allow that, right? Let me ask you the question: can you go to your bank and show them and have them break down to you how the money is sent and to show you firsthand?
Are you talking about like with the options level, the level 2, level 3 class, or are you
I'm
talking
talking
about
about
that?
any asset class, any financial institutional scenario where you can see how money is broke down, encapsulated back into a package, and sent back out. Where you can see the whole process of how that works.
I don't know.
You do, but it just ain't coming to your head there right now.
I'm so bad at once you ask a question, I'm like, duh, I can't answer.
It's all right. It's all
I'm
right.
bad at taking tests.
That's all right. Sorry. But you just think about that. We're talking about transparency, right? The one thing that the banks don't have is what? The one thing the banks do not have is what? Transparency, right?
Okay. Okay. I'm
Right?
with you.
They don't show you all that, right? They just taking and adding fees and whatever, right? They call the cops
Hmm.
on you coming in. So let me look at the books and all this stuff, right? You know, you don't see that whole synchronous acknowledgement process of the money because it goes from wherever the sender, right? Y'all know how it works on the ACS transfer, right? It goes from the sender, whoever that is, it goes directly to the first layer institution that's going to what now lobby that money or lay up that money to the what to the next secure level. At that point, when it gets through the bank firewall or that institution, then it goes strictly to the who. Matter of fact, over Chris on this picture, his icon right there, it goes to who. Once it leaves the banks, it goes straight to who?
Federal,
Federal Reserve, right? It got to go through the Federal Reserve before it even can go back to anywhere it's gonna go from that point on. It got to get checked for what? Money laundering, all that stuff. They got to check that money. Where it came from, the institutions, all that stuff, like a wire transfer. It got to go through the Fed. Everything that you do in America go through the Fed. They check it, they repackage it, then they send it on its way.
Okay.
Right. Now you don't necessarily get to see all that process in real time, like you had a candy factory where you stand at the window watching them make the candy, right? They pour the sugar, they put it in the copper pot, they add the water, all that, right? You watch that whole process, then come out like, here it is on the counter. Yeah. Well, technically, you would like, I would want to know, right? Because you want to see if there's any kind of, But the only scenario that allows that is the blockchain.
All right.
Dun dun
Because
dun
it's not
dun.
because it's decentralized.
100% ledger. You see it from package being broke down, the bytes and all that stuff, the amount of gas it takes to kind of move it, all the way to that final layer through the chain, piece by piece. Like you ever watched the movie The Matrix? I'm sure y'all have, right? The Matrix, right?
Yeah.
When Neo get on that cell phone, on that call, I say a cell phone, but yeah, when he was on that phone, and then he called the operator, and like, put him up, bring me on, and shoot me through the system, right? What happened when he stuck that phone to the ear? He began to what? Break down in the particles and went through that cell phone. Yeah, that sounded all it sounded to me. And you saw him moving through the what? The network as ones and zeros as light, right?
Yeah.
And then he come out on the other end through another cell phone or call or phone book or wherever. I don't know, phone book, telephone. And then he back together again. Right? That's the blockchain. See, they were giving y'all hints way back then about the blockchain. Look at that. See how they did you?
Yeah. Matter of fact, the lady that wrote those, didn't the lady that wasn't the lady that wrote those stories? She just won that lawsuit. She wrote the Terminator 2. She wrote Terminator
Yeah, the
1,
black
2,
lady.
3, 4. Yeah.
She went after James Cameron and those guys, right?
She sued and won. She wrote The Matrix and
Terminator. Mm-hmm.
It's nice. Okay. Thank you.
Anytime. But no, see, that's the great about this stuff because it's great. It's information. Right? The more you can work with, the more you can you can make movies. Whether it's useful or not in the near term, it has value. overall at some point, or you may be able to use it, down the line. The
It's
same way.
another plus at, like when you're not, I know you watch your accounts and everything, but sometimes if you're like you said, when you're trading like on emotion, you want to move, trade, and then you start losing track, or sometimes when you slow down, these little incentives help to bring your account back. Have to bring it
Facts.
back up slowly.
1000% facts. Because this is a game of, again, chess, not checkers. Right? High level, Texas Hold'em poker or something. You got to keep a calm face through all of it. Right? Don't reveal your hand through your smile. Right? Right?
Yeah.
Because right when you think you about to win, they setting you up. Right? They setting you up. Right? Right. So it's great, when you can again get different layers and perspectives, and again, just adds to your armor. As we like to say, it's going to add to your armor. You can become more, you can be more proficient and sharp, and the knowledge doesn't hurt. Again, delta hedging, the importance of delta hedging, long and short. Right. I don't know if y'all seen it. They got videos and stuff. That's why we love Investopedia, right? Right. So
Yeah.
real quick, let's just for the sake of let's see here. Let's go over here. Let's go right over here really quick here. What's going on, Ober Chris? Peace, power, profit to you, Ober. See you in the building.
Peace, power, profit, Ober. Peace, power, and profit, Ober. Angie, how are y'all?
Doing well, doing well. Enjoying all this, these moments of preparation, right? As we like to say, right? Keeping our, mind greased properly, right? So we can get out there and roll with the best of them, right?
Absolutely.
Right. Knowledge brings power. Power equals profit. We love it.
We need them shirts, man, ASAP.
Yeah, we got to get on. I need to go on and get on. I keep trying to put it out, but I need to go and hit the sister up so we can get this happening. I didn't put it out because I do want to make it a merch, aspect of what we offer, because that little bit helps, and it's again, so it's a part of what we live at. It's a part of our existence, So it's not like again, I keep making fun of these people when you buy all that other stuff, the Giuseppe's and the June bugs. I don't know what that stuff is, but yeah, we'll own the stuff that we brand, brand the stuff that we own, so, or that we stand by, I should say. So yeah, we own that. So some wristbands, some keychains, all that. We need to get all that out there. Right, it's definitely time. Right. So looking at that delta hedge scenario, right? So really quick, let's play a little bit of that right there. All right, let me see if I can cut my little background music off in the background. I did my whole little background music thing. All right, let me cut that one off. And so let's see what the video of delta hedging. What did they say about delta hedging? All right, let me see here.
Delta hedging is a derivative trading strategy that attempts to reduce or eliminate the risk caused by price changes in the underlying asset. The process involves taking long or short positions in the underlying asset. A derivative's delta is the relation between changes in the derivative's price and changes in the price of the underlying asset. So if the underlying asset's price changes, the derivative's price will have a corresponding change. The delta tells how much this change will be. For a put, when the underlying asset's price rises, the price of the put goes down. If a put option has a delta of 0.25 and the underlying asset changes in price by $12, then the price of the put option will change by $3. Delta hedging involves making another trade that neutralizes the delta. As an example, a trader who owns a put option with a delta of 0.25 needs to buy some of the underlying asset to make the delta hedge. The amount of underlying assets the trader needs to own is based on the delta. For a put with 0.25 delta, the trader will need to own 25% of the amount of underlying asset covered by the option. Therefore, if the put is for 100 shares of ABC stock, the trader needs to...
Sorry about that. I forgot I had that banner up. My bad, guys.
Delta hedging is a derivative trading strategy that attempts to reduce or eliminate the risk caused by price changes in the underlying asset. The process involves taking long or short positions in the underlying asset. A derivative's delta is the relation between changes in the derivative's price and changes in the price of the underlying asset. So if the underlying asset's price changes, the derivative's price will have a corresponding change. The delta tells how much this change will be. For a put, when the underlying asset's price rises, the price of the put goes down. If a put option has a delta of 0.25 and the underlying asset changes in price by $12, then the price of the put option will change by $3. Delta hedging involves making another trade that neutralizes the delta. As an example, a trader who owns a put option with a delta of 0.25 needs to buy some of the underlying asset to make the delta hedge. The amount of underlying assets the trader needs to own is based on the delta. For a put with 0.25 delta, the trader will need to own 25% of the amount of underlying asset covered by the option. Therefore, if the put is for 100 shares of ABC stock, the trader needs to own 25 shares of ABC to delta hedge his ABC put.
All right. So you guys get that there? That's what market makers are doing pretty much most of the part of the day. Essentially, right? They're trying to protect, again, I don't know if you want to say traders from themselves or the market. I don't know. But that's what they're doing. And moments when they lose control in that moment, that's when you have expansion. Then guess what? You get that underlying strength because at that point, the ship, and we use the ship analogy, right? Most of the people that are on the ship end up flooding to that one side, causing it to tip, in their favor. Or not in their case, I guess if you want trying to keep them drowning, but the tug of war theory, right? The tug of war theory, we use that.
That's kind of what happened Friday. Well, I think market
exactly
makers, killed calls and puts on Friday mostly.
Yep. For those who are trading intraday, they had got in at the most inopportune times, because the time crushed them,
Right.
And it's weird too, because we was talking about that, in our training session that Thursday about the probability of opportunity, right? To the downside and to the upside. And if not, market makers will probably go neutral, you know what I'm saying? And just kind of try to get out the market, out the week, any less damage than possible, right? Because keep in mind, their mode of operating now is always to be positive in the aspect of being delta neutral, keeping the market planed out so it can incrementally go to the upside. So essentially, that's what you got when the market was just kind of stuck. Sharp rundowns, and immediately, somewhat near after that, rip your face off, rally candles back up to the upside, but it go right back to the resistance point where it fell from. All right, it didn't say, okay, we're going to take out the high, the high at this point and just run and go higher. Just roll back over. And so throughout all that, the theta just doing what? Decay, just killing all that premium. So you had to say, well, okay, let me get out of those underlying positions of trying to go, directional bias in either direction, and let me just play the pivots, right? That was the only way you're going to make money, intraday pivots. Of course, you had to have the day trades to be able to do so, and you had the patience to sit through a lot of that, which over time it wears on your patience. That's how markets work. They will wear on your patience all the way down to the last second. As soon as you sell, what happened? It runs. Either up or down. Either way, it breaks or it runs. You're like, I just sold. Income, it goes and make a little quick little run. You make some money, whatever. Or could have made money. And you say to yourself, man, this is straight cheating. Right? They're cheating. Like, how is this even possible? That's how this stuff works. Right? It's all about they're sitting there watching people get frustrated and start selling their contracts. And then when people start selling, they start market makers and the banks and hedge funds and also to see the stuff, the bigger player, they'll start buying into that strength, into that, people dumping, they start buying into it. So it's called what they call a micro artificial squeeze. Right now, at the time of the market turned again Friday, it was obvious why it turned. At the time of when it turned or where it turned, it was obvious what was what caused it. Some would say, okay, yeah, they finalized the deal of the plan. Now I got to go to the house for the debt ceiling. Yeah, but also, which we've been known to do in terms of what we do is what keep our eyes on the prize, because essentially right after that, that scenario came into play. What I saw was a reverse repo operation that had a release time of 12:45 and the end of that. So right around that 115, 120, 130, some of that aspect of those bonds were now being, fleeting back to the feds, which they, of course, that's trying to keep a hold on the what? That keeps the hold on yields. Because before that, the 10-year just was ripping all day. The 10 years was ripping all day. And then it hit a moment where it paused a little bit, right? It's like this slammed the brakes on it. Just enough where banks and hedge funds could turn around and take, right, some of that capital, right? Some of that capital that they got from the by relinquishing their bonds to the Fed, they could take that cash that the Feds gave them in return, and they bought the what? Equities. They bought the SP 500. I mean, literally, they turned it. Look, I can show you better than I'm telling you, right? Because we know the reverse repo operations, obviously, the auctions typically start around 12:45 and they end around 1:15, right? Now, sometimes that money that the banks get from the auction, they may sit on it a little bit before they buy the markets right away. Some of them, as soon as it settles, they just start buying, right? They just start buying, right? Look right here. I love this stuff. Love this stuff, right? Matter of fact, 1 second. Sister, hold up. Okay, that's Kelly over there. Okay, let me show y'all this real quick here. Now, this has already ended, but we'll just, for the sake of, because it's moving into next week. But I just want to show you this here, right? We'll do the recent operations, right? Recent operations, right? This was Thursday, right? Going into Friday. See right here? The auction release time at 12:45, close time at 1:15. They had the auction, opening. They closed it at 1:15. 76 parties, intercepted based or accounted for it. Whoever those parties were, they released their bonds to the Fed. Feds gave them cash, less liquidity, right, to meet their little, I guess, in-house reserves that they need to get through the day, right? Reverse repo operation, right? $1.3 trillion worth, right? That was dispersed across 76 parties, banks, hedge funds, whatever. 1:15, now PM, 12:45 to 1:15 PM, right? Okay. Make it make sense, brother AfurakanEmporium. Make it make sense then. No problem, right? I will oblige, right? Come right over here. Let's run over here. Let's go to SP 500, 5-minute chart. All right. That dump. Now, weird that dump happened right before that too, but yeah, we get it. All right. But look right here. What time is that right there, guys? Anybody? What time is that right there? Looks like 1:15 to me. 1:20, 1:15, 5 minutes, right? After that, climb, right? Even though you had to pull right there, right after that, climb, right? Climb. Just kept climbing. Now, it didn't happen up here. It didn't happen here. It didn't happen. Right when the auction got completed, they dispersed those funds. Those bonds got, taken in custody by the Feds from the banks, institutions, whatever. They gave them cash in return, right? Until they come back for those bond scenario. And then they took that money and put it into the markets. Most cases, they're going to buy ETFs, right? Safest way to trade the market, right? In the individual. But guess what? Stocks individually benefit off that too sometime, and they, respect the value, But that's why the SP 500 was, that turned like that and just kind of started moving to the upside. Grinding to just grind it up. Like, it's like, when you see it doing that, you just get upset because you're like, I see what they're doing. Ain't nothing you can do to stop it too. Look at the size of those candles, the size of them. Don't that look like a lot of people that got a lot of new money and they couldn't wait to disperse it in the market? Looks like it to me. I got this bag. I'm finna make them pay now. I'm gonna get them. Just juicing. Look at the size of the candles. Just juicing them. It took all day for the market to come down and fall to there. And then it took every bit of, again, an hour to get it all the way back up there. That took it, what, 1, 2, 3, 3 hours, 3.5 hours to fall. They did that entire, retraced that entire move in 1 hour back to the upside, less than an hour actually, in some cases. Retraced that entire move back to the upside on the reverse repo scenario. And then relinquish that, the sales of that, some of that stuff back, back and pop it to the feds, whatever. And then the market did what? It just trailed back down. This stuff is crazy. Market makers get right behind it. When they see that, the market makers, they already know what the deal is at that point. These people know what's up. They communicate too, right? Don't let them tell you they don't, right? They communicate. And then the market, they just start buying. They start buying. Granted, the market all the way back up. See stuff like that, man. But hey, who got the time to sit around and know all that and learn all that stuff? But I'm just showing that's a paper trail, right? It's a paper trail. Either way you look at it, it's a paper trail, right? And you say to yourself, man, this is just, man, right? This is just wild. Well, that's the market, right? This is how big money is always, again, surrounding or just hanging out around the marketplaces, right? The fact that we're here, guess what? We have access. It beats sitting around waiting on the government to get right and do something. Or, or your boss to cut you some extra hours on overtime, time and a half. It beats going through all that. Right? It's, it's crazy. It's just wild, and that's still how this stuff works. But that's just a quick, again, macro or micro look into this stuff. So when you hear about the terminology within that, again, in the future, you'll know exactly how to deal with that. Right? What is the delta hedging? Why the market ain't doing this? Why they ain't doing that? Whatever. Right? You have a way to again, delineate what's the problem or what's the deal here, what's causing all that. And it was on the end of it's the end of the week expiration, right? It's the end of the week expiration. Right? End of the week expiration. So a lot of contracts had to come up, come before their make. Again, at the end of the day, the market still closed down. Barely, but it just grind up premiums on both sides. Put saying call, just grinded them up. The only time you made it if you bought intraday on the actual pivots themselves, the hard pivots. Right? That's the only way. Right. So again, some good information there. I hope you guys benefited from it. Right. I hope it was edifying. Again, I hope it helped, your perspective, your narrative a little bit better. Again, you got something to work with every day that you can gain a little extra knowledge or at least some understanding. If it helps, then that's a win-win. Right? That's a win-win situation. Right? And you're only going to get better as the saying goes, right? You're going to get better with time. Right? You're going to continue to get better in time with that. Right? So outside of that, that's it on delta. Delta hedging. Understanding delta, neutrality from that perspective. Delta neutrality, right? And how effective it is. And it could be just as pesky too, though, right? It could be pesky. Man, it could be pesky when you want expansion on your contract. When you buying premium, right? You need that thing to drop or fall or rise, right? It's just like going sideways. Oh boy, what's this about? You dirty jokers. But that's a part of the game. All right, that's a part of the game. Right? So outside of that, guys, that's that's about it. Again, we had some news. Let's say what what the market's gonna signal for next week. Well, guess what? Economic calendar. What we got next week coming out. Right. We got some. We had the job numbers this week. It was major. It was it was not to be expected in some cases for some people, and some people say probably it was. Hey, whatever, right? But I will say, this that ain't necessarily good for the Feds either way, right? But the job claim numbers were better, but the added jobs were whack. Friday, non-farm payroll. Well, we know what that is. That's a one-off event. They couldn't play that down. Joe Biden tried to, but we know the reason why there was less jobs created just here recently is because the vaccine mandate. People had to show up with a vaccine or a vaccine card. People like, hey, I'm still on the fence about this stuff, man. I need some more data on this here. So that's stifled the unemployment numbers. But there were still less people that filed for unemployment. So that still shows that more people are remaining employed that are already employed, or they're getting, they're still, working or seeking employment to that regard. But there's still a lot of jobs still have to get filled. We get that. Right. So so next week, of course, we still got important data. Y'all know obviously Monday is it's a fake holiday, right? Right? I know somebody gonna come for me on that one. Monday is a fake holiday, right? Y'all know what that fake holiday is, right? I'm pretty sure y'all do, right? What is the holiday for Monday? Matter of fact, let me go over there. I'm sorry, I put it on my screen. Where we at? There we go. All right, we have a fake holiday Monday. Matter of fact, look, Canada actually has Thanksgiving, right? They have their Thanksgiving on October 11th. I don't know if y'all knew that or not. Canada got Thanksgiving Day tomorrow, right? Or Monday, excuse me, Monday.
No, I didn't know that either.
Right? Thanksgiving Day for Canada. Oh, Canada. How the song go? Oh, Canada. hey, shots fired to Canada, right? Don't y'all come from me, Canada. Canadian people up there, don't y'all come from me.
All I know is that the bread and circus always capitalize off the people. I just wanted to point out that I made a post about Squid Game. I think that's the name of the show on Netflix. And the slides or the shoes they were wearing in the show, the sales went up 7,800%, which the company is Vans. Vans is owned by Vanity Fair Corporation.
Yep.
Publicly traded. I'm a shareholder. Capitalize on anything that they made.
See how that worked? And I think at some point, I want to say, was it Nike was thinking about buying them? Because I know when they bought Converse, see, at that point, they was making a big sweep across the shoe market. They were trying to snatch up some of these, old school, iconic, brands. So they bought Converse.
Yep.
I guess they thought about possibly buying Reebok. They didn't. But they bought up a few other ones too, right? But Vans was one of the ones that were like, okay, that would have been great because that's kind of in the line of Skechers, right?
Yep.
Right. Those kind of, off it, but they still have a good following, right? The skateboards and all this stuff. And so, of course, if you catch around and catch a good media blitz, in this case, the Squid Games that comes out on Netflix, that was the #1 watch show around the entire, or series that's watched around the entire world. Literally, it gained all that publicity overnight. So when you watch that, you watch with intent. Sometimes for you're a smart person, you watch with intent, right? For the investors, what advertisement going on here. If you just like the show, then you're watching for all the action and theatrical stuff. But yeah, smart people say, "Oh, I see them Vans. I see more people wearing them too, right? I see what's going on here. That's some brands. That's brand recognition. That's spotlight moment." And lo and behold, people went out and start buying what the shoes.
Yep.
Right. Is that at work? So I tell people, man, we watch with intent to catch the cryptic message. We listen with the intent to listen to figure out what is actually being said. That's what separates you from a lot of your peers. No disrespect to them, but you're now thinking and moving like an executive. Facts. You train your eyes better. You train your ears better. You reprogram your brain better. You moving like a boss. We're opportunists. You know, at the end of the day, this we come here to seek opportunity. So all this stuff matters. So again, people like, man, all right, man, I don't see the need in that. That's fine. You just quite ain't there yet. Ain't no slight against you. It's just you just ain't there yet. Right? I may not can have that conversation with you right now. You know, where you can understand it. That's okay. You know, but I understand it. You know, and and like minds, think alike, and that's why you gonna hang out with people that understand it. It's simple as that. Right? It's no swipe against them. It's just that my interests are a little bit more. My interests are up right now in terms of what I need to be focused on.
Right.
Right. So this week we do got some economic counting. Like I say, Monday is a fake holiday, right? All right, y'all already know what it is. I ain't got to say it, I guess. Right. All right. We know what that is. Then we do have late. We have a 10-year auction. Of course, that's on Tuesday. That's gonna be important because that 10 years ripping right now. All right. We got a 10-year note auctions coming up Tuesday at 1:00. That's gonna be that's gonna be worth watching. Red Book come out on that morning at 8:55. Excuse me. So you can catch that if you see anything to that. Moving throughout the week a little bit. Then we have housing. Right. We got the mortgage numbers. Right. Mortgage 30-year rate. The report come out on that Wednesday at 7. So that's gonna be interesting because again, we still got to keep an eye on the housing market. Right. That commodity. That aspect of what inflation, cost of raw goods and services, right? Wood, lumber, metal, all that stuff, right? Is it really, backing off in the housing world? If they're able to move units, or I know there's always a shortage of houses in America, right? But hey, the Fed is still buying $20 billion worth of what? Excuse me, $40 billion worth of mortgage-backed securities. They're trying to backstop those who are already on paper, right? From 30-year notes. All right, so that number they're gonna be probably worthy. And then we also have the OPEC monthly read out. That's gonna be big for oil. Oil just been all over the place. All right, $80 a barrel. Now they talking about $100 all stuff. Hey, all right, slow your roll. They're killing us at the pump, right? And I will say this in fairness, Joe Biden, bruh, don't blame it on the hurricane. We had hurricanes on the Trump. Trump kept that barrels of oil around 50, 55, right? True story. He's like, man, oil don't need to be no more than $50, $55, bro. Yeah, you thinking like a businessman, right?
Facts.
He kept the gas at a decent price. You weren't hurting at the pump, among all the other stuff that were going crazy and all the other wild stuff, but you didn't have to fight at the pump at least. Now, man, gas is going up like crazy in a lot of places. And the higher the price of barrel of oil go, 55 gallon drum or that crude, that sweet crude, you're gonna feel it, in a rude way at the gas pump. And you're gonna say, oh, thank you, Joe Biden. Because it still falls on the sitting president, no matter how you look at it.
Yeah.
Right. So they need to crank up some reserves, get some of the barrels out of the reserve, or cause these nations to pump more barrels. Right. Hey, right. They're making excuses, right? Then they just had a little oil spill recently, and all that. Oh man, excuses. Right. But also Wednesday we got what? CPI. Woo. Right. That consumer price index. 8:30 Wednesday. Boy, that's a popcorn moment. Right.
Yeah.
Last one we had what? We had a 0.1% increase. This time they're expecting a 0.3. It's going up. Inflation still going up. So what that means it's not so transitory. It's time to start tapering, Jerome Powell, right? Jay Powell, right? Your Clayton Bisbee voice, Powell, right? It start cut tapering, bro. So they're expecting an increase in inflation, obviously. Right? That's gonna be detrimental. That's a detrimental piece of data there. People are like, well, what's the significance of that? I would say do a little research on that. Next time we talk, we can talk about it. We talked about it a lot on here anyway, but it ain't like it's a secret, but that's detrimental. You can't have rising inflation, and even though you got participation and wage value starting to grow up a little bit, and you got people, somewhat still moving back into the workforce, you got to bring the cost of goods and service down because now there's some layers of production starting to happen somewhere that should balance out some of that inflation. You can't artificially print money at this point. That tears up the system. You got to start tapering. You got to pull back some of those funds, that liquidity, and allow the natural market, work itself in a way where it can take care of that problem.
Mm-hmm.
So these companies can earnestly and honestly earn their way, because right now they're not. They're getting artificially pumped up and propped.
Yep.
I don't have no problem with it because I got long-term portfolio like anybody else. I get it, but I have a problem with how they reckon the overall Main Street economy. That's where I have a problem. I mean, I don't have a problem with my stock going up because everybody wants their stock to go up, but I know it's artificial. I'm not a fool to think, oh, this is just the greatest market ever. This is the greatest. No, that's stupid, right?
Right.
That's stupid. That's not the case. It's a Keynesian marketplace. It's a Keynesian marketplace right now. It's government control. And I don't know if y'all saw this Friday. Did y'all see what came out of Canada? By any chance, anybody catch that news that came out Friday in Canada?
It came out of Canada.
They are starting to taper. They finna get ready to taper, right? They finna put pressure on our central bank. Their central banks are starting to consider, start to taper. They are. Well, obviously they had it better than us through the pandemic anyway, because they paid their citizens money. They put money into the citizens exposed to the corporations in the stock markets. They put their money in the hands of the people. The people went out there and bought goods and services to keep their prices somewhat in check.
Mm-hmm.
In America, they so stingy and they so hateful and they so spiteful and they so ratchet. The money that you paid in your taxes, they took it and gave it to Wall Street. End of discussion. Without your permission, they took your money and gave it to Wall Street. Couldn't make this stuff up. Okay. Yeah, this is why you want to learn it, because when they do stuff like that, you go right over there in Wall Street and you get it. You get it back. Since that's what we're here to do. We're here to get that money back. All right. So, yeah. CPI data first thing Wednesday. Get excited. Popcorn moment. Right? Get your vegan popcorn or your whatever. And 8:30 in the morning. Yeah. Front center, front of the screen. Let me see what the numbers look like. And from that, in terms of the market, then how they're going to react to that, because we know they're already under pressure. But yeah, I would say this. I think it's all but certain at this point, unless something really crazy happens, where we should start hearing it final that they're going to do some tapering in the month of November. It's all but said at this point. And the Fed look bad right now because of insider trading. They ain't got no leg to stand on. They not playing from a place of leverage right now. They can't walk around with their chest poked out like they the God, which they've been trying to play. But turned out they were frauds. They were trading the market off a policy that was coming out of their house. Straight frauds. All of them. Somebody can say, well, only 3 of them got caught. Well, guess what? If 3 got caught, how many of this yet to get caught? Stop playing. That whole house is corrupt. Because these were not just down the line type people. These were governors and the vice chair of the Fed. The vice chair of the Fed. Essentially, Jerome Powell, right-hand man, got caught front-running policy through investments. Sizable investments. Off the taxpayers' money, it came up. Millions of dollars. Man, I tell you, for these people here. But America ain't this, America ain't that. America's fair. No, they would never do nothing like that. No. You got it all wrong. What rock you live under? These people are corrupt is spoiled cheese. Greed begets greed. They hoard, they steal, they lie, and then they rub it in your face, through laws where you can't get at them. To a degree. That just means somebody ain't doing their job. That's supposed to be the oversight committee. Gary Gensler. Right. He's gonna make life miserable for retail traders, but he can't go after the white collar criminals in the Feds and the Senate and the Congress that's inside of trading the market. Couldn't make this stuff up. Right? Could not make this stuff up. So CPI data running hot Wednesday. Get your popcorn. Right. 30-year bond auction also. We got a 10-year on a Tuesday, 30 on the Wednesday, I think. Right, as you see there. And then we got, some more CPI data coming out again. And continuous job numbers. In this case, we got PPI data, PPI data. CPI normally comes out first, then PPI. PPI is producer price index. That's how the producers are feeling the inflation from the consumers. They're the ones that's even having to pass off the cost to the consumer or eat the cost. But nonetheless, it's hurting them even more if they had to pay the higher price for the raw goods and services that they need to produce the product to get it out to the customer. That's a double whammy. That number expecting to go higher. 6.7 last time. Now it's supposed to be 7.1% this time. That's an increase in inflation. Jobless claims supposed to come down. We'll see. We already been coming down. We came down a little bit this year. Let me see this year. Last week. This next week is supposed to be down to 270,000 jobless claims. That means employment is picking up, or at least less people are seeking benefits from the government. And them, in government eyes, that's a win. Right. So that's more reason for the Feds to taper. Stop, putting the kickstand on the market. Let the market stand up on two tires and move. Get them training wheels off of it. So PPI data Thursday, jobless claim numbers, more important numbers right there. Initial jobless claim, more important numbers to watch there. But most important, it's going to be about that PPI data on Thursday. All right. And then we still got, some other stuff, some more oil numbers, imports as well on that Thursday. Crude oil import, stuff like this, distillery fuel index, stuff like that. See what that's looking like. That's important, though. Those are important numbers because the gas is up. Gasoline production, that's up. Heating oil stockpiles. Natural gas has been on the tear lately. UNG, natty gas, stuff like that. It's just been going crazy. Right. So yeah, we got some important data next week too, but we ain't out to work yet. But like, ain't no more catalysts left out there in the market to move. Besides this, if they're gonna taper now, shucks, I don't know. And then Friday we roll out on core retail sales. Core retail sales, that's important. New York Empire State Manufacturing Index, that number, right? See some slippage on that potentially for estimates, right? Yeah, so we ready to rock, guys. So that's going into next week. That's the market ahead of next week. Again, that's just from the economic calendar side. Of course, we know there's individual stocks that have things to reckon to, because guess what? We getting ready to go back into earnings cycle, right? Earnings season starts when? Right? I don't know if y'all know this now, but earnings season starts essentially, a week after next week, basically the following Monday. Not next Monday, but the Monday after that. That's when the earnings season kick off again. So you start off with the banks first, then you move to some of those tech type stocks, big stocks, then you move down the line from there. So Tesla and all them type, they get ready to come. I think Tesla earnings on the 18th, something like that, I think. October 18th, somewhere around there. October 20th, one of them days. Yeah, big numbers for them, right? Because they beat handily on their production numbers for the month of September. Right? Going into October, and it did on August too. So that means that's when they do their numbers. That means that's vehicles that are delivered. So that means that's cash in hand that they got from those sales. So you can surmise that they did pretty decent. They beat their expectations. That's not rocket science. Now they got other stuff to deal with, in terms of they having it expenditure costs. Well, we'll see. They've been trying to keep those down, right? They having to deal with the chip shortage like everybody else. But for the most part, they were able to get that stuff on the books, at least for the month, the quarter, to help pad that going forward. Now they'll have to speak to that in the conference call for the guidance, whether investors like that or not. Meaning not investors, but the hedge fund that might try to trade it, right? But revenue wise, they should be able to beat revenue. And Tesla, just paraphrasing this scenario, earnings. But yeah, right. So there might be a moment where they might try to front run Tesla into earnings. The only thing still kicking, tech in the teeth right now that they just haven't got that free rural run like they used to get in the earnings. That 10-year yield is waking up. No more just kind of spazzing out of control to the upside now for these tech stocks until that 10-year yield either pulls back, go sideways, or whatever. It's keeping them under check, right? Because they've been borrowing cheap money for so long to buy their stuff. Now that's going to be a problem because the yields, interest rates are going up. right? That's the correlation. If you ever had to ask yourself that, that's the correlation. 10-year yield goes up, 10-year yield goes up. Tech stocks get under fire. They get under control. They get nervous. They end up with a little small case of bubble guts. Right? They're in trouble. Right? So yeah, we ready, guys. So that's just from an economic standpoint. But coming for next week, you can guys do a little bit more deep research and figure out what these individual stocks may do. Right? Gotta leave some of that stuff out there for y'all to research. Right? Right? But I will leave this on this last point here. We got a big win, and I say we, meaning those who see value in the balance of legality working out in the favor of everybody. It is, I don't know, in a roundabout way, still it's a psychological victory than it is just on paper, but it is for some people, because guess what? I'm a proponent of obviously legalization of what? Marijuana. Now I don't use it, but I understand the value of it. Now the medicinal side, of course, I'm there, right? I understand the value of it. I know how beneficial it will be in our medical system. Let me put it this way. If you had the choice, now this is just a hypothetical scenario. If you had the choice to take a dose of CBD oil, a high level CBD oil, just hypothetically, to deal with and fight with COVID, than a concoction of the vaccine stuff that's coming out, they got a lot of everybody scared and this, that, they don't know what to do and make people. Which one would you rather choose? Now, this is a hypothetical, of course. Again, I get it. We know what's up. If you had to choose CBD oil, a dose of CBD oil to the vein, or a vaccine of whatever to the vein, which one would you go with? Right? Hey, hey, all right. Right. But there is value to that statement. Why? Because a lot of things that affect America, and cancer, and Alzheimer's, and Parkinson's, and sleep apnea, right? And on and on and on. I can go on and on. Dermatologist issue, right? The dermatologist based skin diseases and melanoma and skin cancers. And that's CBD oil, hemp oil, or hemp. That's the fix. And those are billion and $1 trillion industries of healthcare. That's the importance of what medicinal marijuana is going to do to that scene, if they really just go ahead and open this thing up. See, so Amazon, right? Amazon, big old Amazon. Amazon jumped out there and they did what? Right? Let me see if I can go over here to my little Facebook page here. Right? So let's get Facebook. Amazon, right? More than most big tech companies, right? Amazon has taken an active interest in legalization. And this is a weed publication, marijuana site. So let's make sure I put that out there for context. They've taken an active keyword, active interest in legalization. That means they act on it at this point. They're not just researching, they're actively trying to figure out how they can benefit. Right? Earlier this year, it came out in support of the MORE Act. Y'all know I've been talking about that MORE Act for quite a while. The importance of that MORE Act in terms of it's kind of like reparations for people who've been wrongfully in prison for the value of marijuana. People who got caught with a gram, if that, got slammed, and put on their record as like they did some kind of hardened criminal, like marijuana, a wild plant. Are you kidding me? I mean, I know the philosophical principle aspect of it, but we know America's greedy, right? They like to criminalize everybody that they can, more so people who, are already marginalized, right? Let's just call it what it is. So that MORE Act is very important, right? That also falls in line with the Banking Act part of that, to also help these banks be more comfortable in receiving income off the legalization of marijuana, this, that, the third. So they can loan that money out to people who want to start, marijuana businesses, this, that, the third, right? So that's also on the docket, but it's coming. Things are moving. It's slowly, but it's moving. So the progressive bill, which it would federally decriminalize, right? So again, in support of the MORE Act, which is basically a bill to decriminalize marijuana federally. So from a Schedule I drug, right, Schedule I narcotic, to that of basically nothing, right? It's like cigarettes. And said it would stop testing most employees for THC. Now, naturally, your body does produce THC on its own, but it gets spiked when you add actually cannabinol to it, right? Right? When you add that to it, Yeah, that's what causes them to tell that whether or not you've been on that plant, right? But they're gonna stop testing employees, right? They say most, I guess people who deal with machinery, they're still gonna test them until they take it away from Schedule 1. But that's still good. That's still a victory. They're gonna stop testing employees, right? Or the drivers, I should say. I don't know if that's the case or not, but they're gonna stop testing most of the employees for THC. Amazon is the second largest job creator literally in America. So just putting that out there for context, right? So in the blog post this week, the senior vice president of human resources, Beth Galady, said that the company now supports the progressive bill proposed by Senator Majority Leader Chuck Schumer. So y'all know, everybody knows Chuck Schumer is pushing this, and many others as well, Cory Booker and many others, AOC and a few others that are pushing that marijuana legalization aspect of it, right? Right. Again, that's a major, major win for the system, right? So yeah, she added that the company would reinstate, I repeat, the company is going to reinstate employment eligibility for applicants who were denied jobs or former employees who were fired after failing a drug test. Get excited. As if everybody just beating in the door to go work at Amazon anyway, right? Shots fired. Shots fired. But guess what? That puts a lot of people back to work that want to go back to work. Now they got to still dodge all this old vaccine mandate. Boy, you can't win for losing, right? Shucks. Ugh. But guess what? At least they can't be penalized for what? For marijuana. That's Amazon. You don't think a lot of other companies not finna follow suit? Because Amazon be like, don't worry about it. We'll be glad to take your workforce. If you don't want them, we'll take them. Let that marinate for a moment. So as the country's second largest private employer after Walmart, Amazon's decision on employment policy is likely to be influential with hiring managers nationwide. At least Amazon is also lobbying that part. They're lobbying on the legalization related issues, right? Basically through Congress and government. Now that's big. If Amazon gonna get behind that, people listen when Amazon move. Of course they do, right? Got the second richest man on the planet, and Jeff Bezos. He flip-flopped between first and second a lot with Elon lately, right? But nonetheless, his brand value there, the company Amazon is a juggernaut. If they wouldn't hire people, then guess what? Who are you to be turning them away, discriminating against them because of this old, something as minute as a plant? That's just because they show up to work that's just totally unstable and just, zooted, I guess. Yeah, but outside of that, yeah, it's just a little cannabis, right? So I cope with all these little wages y'all paying me. Hey, shots fired. Right. So that's a big win for the normalization of cannabis. That's a big win for the normalization of cannabis. It gets an Amazon endorsement. Right? But it doesn't explain why Amazon's getting out in front of the issue. Well, the obvious explanation is that the company wants to sling weed, right? And the idea that it wants to sling weed doesn't quite fit. So what's going on? A letter commenting, on Schumer's bill that the company wrote was that we found that eliminating the pre-employment testing for cannabis allows us, it allows us to expand our applicant pool and assist us with meeting our hiring needs or goals. That part. All right. Those fulfillment centers do not operate themselves. See, notice that? They tell you straightforward where they need help at. Those fulfillment centers, right? So in order for you to get your little goods in one day at Amazon, they need people to be in the fulfillment centers, getting that stuff allocated, slotted, logistically put together, and put on them trucks and get to you. Yeah. So what if that dude, smoke a little marijuana in his off time to deal with his Alzheimer's or joint pain or sleep apnea or things of that nature? It's a plant. Right? You full of yourselves if you think that's a scenario, but yet you think cigarettes are better. A chemical, lace, arsenic, pretty much a what do you call it? A coffin nail that you smoking in the cigarette. That's basically what it is. It's a coffin nail. You get one nail closer to the nail in your coffin. Sure, that's what they call them back in the days. It's a coffin nail, cigarettes. That's better than marijuana, natural plant. Okay. All righty there. Right. So the article goes on to say a little bit more about, the idea that, we'll just say what in notes we have refrained from commenting on areas where we do not have a particular view, include a regulation permitting taxation in interstate commerce. Of course, they're going to say that for protection, but they lobbying behind the scenes, obviously, for it. Amazon may want to get into the cannabis business one day. Ooh. Ooh. Amazon Prime for marijuana. Watch out, boy. Let that marinate for a moment. Amazon Prime for marijuana.
Yep.
You get that bag in one day. Boy, look here. You ain't got to worry about going out there dodging little Larry them out there. That thing show up in one day through Prime. Ooh, boy, like, I got that Prime coming. No, seriously, I got that Prime coming. Right, that's what they call it. The young folk call it. What they call it? The loud pack. Yeah, that's what they call it. I got that loud pack, right? Yeah, you got that Prime pack coming tomorrow, bro. That thing will be on the doorstep, but you're gonna be like, yeah, I know that you're gonna smoke. I'm gonna be right there to intercept it too. I'm gonna take it. I'm gonna take it. Right. So the cannabis would think about that. If Amazon get into cannabis business, let that marinate for a moment. They already spook everybody else when it comes to them getting into everybody else business in space, and they got the capital to finance it. Now we know the biggest supporter of the business right now is what Constellation Brands, right? Constellation Brands put what $4 billion in the CGC, cannabis growth, right? Because they want to get into what the marijuana beverage space, right? They want to be able to infuse marijuana in the beverages at some point. Maybe it'll be in your Corona at some point or your Modelo, right? The companies, the beers that Constellation Brands always produces, but nonetheless, or start their own. That's big. If Amazon get into that space, either as their own or they merge with somebody else. In this case, they're gonna try to do big bank, take little bank. They're gonna just do their own thing. That's what Amazon does. They greedy, right? But the cannabis in itself, the cannabis business would be crazy to ignore that tech giant. They're gonna be like, please pick us, Amazon. Look what happened with the company Affirm when they merged with Amazon. The stock went crazy. It went from what, $70, $80 all the way up to like 150. Now imagine, if some lucky cannabis company get picked, or unless Amazon do their own thing, if they just mess around and pick one of the companies out there, boy, that stock gonna do what? I think gonna backflip to the upside. It's gonna do a backflip. Right. So, however, the $90 billion in cash Amazon reported in hand earlier this year is enough to buy every significant pot company several times over. God, dog, 90 billion can buy every marijuana company out there several times over. So yeah, they may spread it out, or they may find one lucky guy and go with them, or they might try to do their own thing. They got the cash to do it. $90 billion worth. Yeah, bruh. That sound fit, bruh. They got it. So it may see little need to get involved in what, the minutia of legalization, right? They on the way. Of course, they're gonna lobby behind the scene because they want to get in a space at their level, right? And then the government will be more trust for them to ship through Prime than they would probably down the scene one, because they're like, it's Amazon. They got better checks and balances, right? They got a better oversight, right? Board of governors, all that stuff. Yeah, we trust them at least, right? Because you got to get those licenses, right? I think it's tier 2, tier 3 type license. If you're gonna be a transporter for marijuana, you got to have those license. Amazon will have no problem getting them, right? Jurisdiction, state scenario, get them licensed. Let's go. Find the drivers that meet the criteria. Let's go. Show up at your house, right? It's probably gonna have to be what they call it, signature delivery, though. They wouldn't just deliver and leave it at your front door, right? I would think so. Right? Like, man, you sure that where my stuff at? Man, I keep ordering, but with a box show that it was delivered, but I don't never see it outside when I get there. Right? Every time you pull up, your neighbor peeking out the peephole. He over there, toe up, right? Red eye. He over there just stealing my package. I'm gonna put a camera out. I'm gonna catch him. Right? You gonna put a camera on that joker. Yeah, I'm pretty sure they're gonna hand it right off to you if that's the case, right? But this is me speculating, of course. Yeah, this is me speculating in that perspective. It seems like that's what will happen, right? So insiders also suggest that the company might also want to be in sync with public opinion, which consistently favors what? Legalization, obviously. Right, obviously, right. Yeah, so that's the big news. That's the big news of the day, right? That news came out today, guys. So yeah, they're on board, right? They probably been on board, but Jeff Bezos a daredevil, even though he ain't with the company like that anymore firsthand, but he still makes those decisions as executive, majority shareholder. I'm pretty sure Jeff Bezos smoke a little weed. He basically retired now at this point. Sure he do. Right? Yeah. Whatever the case, so yeah, they behind it. So that's the second largest employer on the planet that's, basically in support of marijuana. Get excited. So yeah, let these marijuana stocks continue to kind of bottom out a little bit. They're getting closer and closer to legalization. They got a big proponent in Amazon now. That news just came out today. So yeah, that might be a little boost for marijuana stocks Monday. Maybe. It's speculative. It's maybe, right? Maybe. Right? Maybe. Right now, you can go do your research and figure out the age. You can go chase some of these message boards and see if they talk about it, right? Getting all excited maybe for TRA or CDC, who knows? I don't know. But either way, they still got, some hurdles to deal with, obviously, right? But they started to build more of an ecosystem of people getting behind them with big money. That's a good thing. That's a positive. Right? That's a positive. All right. So yeah, so that's it, guys. So I ain't nothing else really. I done said a whole lot with a little bit of time allotted to me. From that perspective, because now I gotta get ready for chill time. Right. All right. So I hope you guys got some out of this conversation today, dealing with delta hedging, delta neutral value. Right. Again, we try to bring edification every time we do crank the channel up. Right. If you want to support, of course you can support. Right. As some would say, as I've been getting harped on, throw your cash app in there, man. Right. People come at me like that sometimes, man. Go and put up there, man. You worthy. I'm just going to honor and echo that what the people say. So if you want to show some support, there's the cash app. I don't ask for, all that. I don't come ask for the numbers. If you want to support, there it is. If you do, you do. If not, I'm going to get it. I'm going to get out the market one way or the other. Hey, I don't live on YouTube. YouTube is not my breadwinner. Hint, hint, wink, wink. We don't need this. Right. But this is a way that we all communicate and meet with each other. Right. In other areas where we, are out there getting to the bag, right? This is where we come together and meet, right? So support the channel if you choose one way or the other. We appreciate you, right? So that's it, guys. I thank you guys for tuning in. Thank you for, again, as always, you're steady, supporting the channel and, coming through, again, providing context in the back chats, and our discussion is to help us to be better at edifying our mindsets. That's what we do. We help people get to a bag, essentially that's what we do. We take you from raw state, help you find a way to connect you to the bag. Right. So we love that. So whether we have 10 people in the back chat or 15 or 20, man, that's a full house for us. Because think about it, it's like class. It's like classroom, 15, 20 people in the classroom, right? These are people who have an interest to want to be here, though. See how that works? And we're talking about something of substance, right? That makes sense. Dollars and cents. Let that marinate. Dollars and cents. Right. So people can't come over here sideways. We get to the bag and we got receipts. So we shut them down real quick. Yep. Here's some receipts. Here goes some receipts right here. Yep. Here's one right here. Yeah. What else you got, bro? You got something else? Something any more talking point? No. Okay. Well, we appreciate you. We won't even be rude, right? We ain't even rude too. That's what crazy. We ain't rude. We just some humble people. We humble. We humble with it. That's it. So I'm out. Yeah. So in the last words over, Chris. Anybody got any last words on the way out? Any last comments in the back chat on the YouTube side of things?
Just Let's get it, man. Apply yourself. Learn to earn, like you got in quotations right there.
I agree, family. That's what we're here for, because I tell you, man, look, there's power in being an autodidact that leads you to an actual monetization of that knowledge that you just took time to acquire. There's power in that. It's okay to learn some for bragging rights too, or just general knowledge. But yeah, if I can monetize knowledge though, woo boy, right? Woo doggy, as they say, right? Well, that's what we do for a living, guys. We monetize knowledge, information and knowledge and data. That's exciting. That's exciting, if you ask me. All right. So thank you all for tuning in. Everybody on the YouTube side of things. Over Al came through the buildings. Over Angie in the building. Over Rich B in the house, right? Our friend MOC came through. Mark, right? Our brother Mathis came through in the building today. Over Brandon came through, right? Our brother everything came through today as well, right? Family, who else came in the building this evening here on this Saturday, right? Over Caesar came through in the building, right? Anybody else that may have been watching that we didn't, that didn't type, we know that you're there. We appreciate you. Our brother, the Snotball, came through the building, right? Over Snotball in the house. Peace, power, and profit to him. Everybody that's, again, that popped in at some point throughout the live stream, maybe gained something from it. We hope you did. We appreciate your view. We appreciate your patronage. And we appreciate the value that anytime we go live, if you're able to come through, you're welcome here anytime, right? This is not an echo chamber. We don't do that over here. We allow everybody to have a critical thought at their own value, at their own interest, right? We're just trying to make sense of all this stuff together collectively as a unit, right? And that's what this is all about. So we appreciate you guys. So I hope you enjoy the rest of your day, your weekend. Hopefully we get a chance to go live tomorrow before the markets open up for the future. Maybe discuss maybe some stuff that may come out. Who knows? But as of today, Amazon gets to what? They get to be the breadwinner of the day, right? I guess what that little show, the Breakfast Club, they got the donkey of the day,
Donkey of the day, yeah.
donkey day, whatever. We're gonna have the breadwinner today, right? The breadwinner today is Amazon. Shout out to Amazon. They hired people that had marijuana charges on their record. They hired people that had THC in their system. They hired people who had past running with marijuana. Shout out to Amazon, right? Shout out to Amazon. All right. So that's it, guys. So I hope you guys enjoyed. Yep. Thank you, Oba Chris, as always, man. Peace, power, and profit to Oba Chris in the building. Sister Angie came through as well. Go subscribe to Oba Chris's YouTube channel, right? Chris Logic in the building, right? You see him in the YouTube back chat. That leads to his YouTube channel, right? Chris Woods, right? Got some knowledge on there to give, guys. Let's go. Let's support each other. Let's build. Let's take this thing to the next level.
Santi-Oba, appreciate y'all. Right. Peace, power, and profit, family.
Peace, power, and profit, everybody. You guys enjoy it. We'll see y'all in the next one. Peace, everybody. Peace, family.